I'm back. I had this. We lost the stream. Had to get the stream back in.
Hey, I saw that kill with them RPGs, bro. Throw your hands. They over here on me.
10-4 copy
Right
that.
here, they right. That's you? That was you. Frog man outfit.
Let me turn the volume up so I can hear you.
Oh shit.
Yo, Green, come over here, Green, so we can get the up on them. About to take on the full team that's over there on you.
Come help me then, okay?
Shit, we ain't finna run in there. We all over here. You bullshitting.
Scared of the smoke?
That
So
is
right
scared
now
of
I'm
the
trying to
smoke.
smoke, if you don't mind.
I'm putting shit down, I just need help.
That's just one. You got 3 more to go. On my brigade. They laid dollar short. My bad.
50 got me too running over
Oh
there.
wow. And there go 2 of them. Oh wow. Oh, I'm down. Oh wow. He right there, my boy. Somebody's still alive. Don't run down there, still alive. Let me back in here. Ooh,
I'm
shit.
staying up.
That boy was on. I'm about wiping so fast, Lord. They wiped the whole team so fast. I'm on the loading. Oh shit, this bitch is on the loadout, bro. Oh wow. He was on the loadout. Damn. 2 of them.
I'm praying that we'll never get it home.
They running in the building. Take forever for that fucking airstrike to come in, man. They still on the loadout.
He's
Look.
shooting gesture.
One jumping down to you. I just put a shot on him. He right there on you, Uptown, right there.
On the move.
Yeah, that's him. That's him.
No, good luck.
Got one more dropping in. One more dropping in over there. Oh, he on the other side of the fucking wall.
Yeah, I dropped down. I ain't no niggas had self. Hmm.
Yo, on the loadout. Damn. Jump down, he finna kill me. Oh, up top? Oh, shit, he finna get me. Oh, he got me. Almost got me. Hurt me.
Fuck you.
Don't go too far, Jester.
Bullets like a motherfucker. What, bro? How's this nigga shoot me underwater?
He probably had a gun that can shoot underwater. A couple of them can.
That's bullshit. The fuck? Niggas underwater in the tunnel. Oh.
Yeah, they're cheating.
Same shit that happened to me.
Yeah, now I'm like you now. Yeah, they cheating. They don't know what the fuck that is. I thought he had something. They don't know. He got like an automatic. He shooting underneath that bitch like it don't even. Stay out of the water. Sharks in the water. That's him right there. Yo, bitch ass nigga. Should be one more. There he is. Bitch ass nigga. Buy me back, please. Oh no, not enough money. Be short. Appointed. Buy me, Jester. Right there in front of you, Carter. He's looking. He went right by you. Yeah, there he is. Don't steal that nigga money. There we go. Ah, that's not your fault. We went pretty far. Top 8. Let's see who else. I'm seeing it. Ronin. Ronin, where you at, Ronin? I know you watching the chat. cars moving out in the 5x5. Multiple bogeys coming out. You alright? Alright, boys, planting detonation charge. Detonating. What y'all gonna put y'all money to get the loadout? Or what y'all gonna do? Oh, you need 20 grand. What's that? We short. Are we short? How much we got? Yeah, we short. Jester, drop your money in Cardo. You pick it up. You should have enough if you pick up everybody's money. There we go, teamwork. There we go. That's what separates us from the animals. That's that John Wick shit. Alright, separates us. Oh, I seen that shit, Cardo, finally. That shit, dog, motherfucker. I don't want to spoil it for everybody else. But yeah, okay. I don't know. That was one. It was a little sad and shit at the end. I don't like how they had the black guy, but I never really liked how the black guy characters be. They be looking stupid. That nigga was pretty stupid through the whole movie and shit. It was like he was like a black version of Halle Berry and shit. I wasn't feeling that. And shit, but that shit was sad. I liked it though. It was different. It was different. I wouldn't say it was the best one so far, but it was alright. I gave it like an 8.
What we talking about?
The John Wick jump.
Oh, okay, okay.
Yeah, I finally saw it. What was it, the other day?
Yeah, I ain't like how it ended either, bro.
Yeah.
So, Text on the line. Thought them two RPG fucking knockdowns. That shit, I couldn't believe that shit. Yo, I don't see nothing on the map right now. We need a UAV. What that's at?
Yeah, we need an ammo box.
Well, let's hustle. I'm finna go to hit this gas station. Give any money in there. About to make it happen, baby. Hey, we can go camp that. I'm pretty sure somebody gonna be going to that. Where that's at? Drop that. Hit.
Damn, you hit something?
Yeah, that dude y'all ping on top of the damn building.
Damn, they everywhere. Multiple bogeys. Take cover.
Did y'all get him? Yeah, ho. Oh, I almost got. Oh, it almost got him. Come on. Where that's at? Oh shit, Frogman, I see you down. He on the other side. Oh, I'm taking shots over here. Oh, he up top, man. Damn, let me. Oh Lord, they about to get me. What the hell is this?
How you not go down? Don't buy me back just yet. I'll be right back.
Voy a subir. Sí. Lo mataron.
Me están apuntando por detrás.
¿Estás de abajo o arriba?
Got one more. He up on us.
Todavía sigue en el techo. Tengo una tienda que viene volando.
Right here.
¿Están los dos? Puta madre. Ah, viene detrás.
On me. Oh Lord. I ain't got no plates. Oh my God. Oh, it wouldn't let me equip the mask? Oh my God. What is this, bruh?
Ya, te muero.
What is this? Bitch ain't nowhere. I'm about to fly off the damn thing. We can't get that, bitch. That's crazy. Butter right there. Butter. Got one. Ping something. Oh, me, oh shit. Ping it.
Ah, la mierda, me va uno.
Oh, they up top of the hill right here, bro. Oh, pink. Fuck. It's alright. It's my fault. I had my mic turned down low.
Alright, I'm back. Okay, Jester out there on TV. You out there representing Jester? No pressure. Take your time. Reload and engage. You're compromised. Get out of there. Fire wheel. Hit. Land on a buy station, Cardo. Give me back.
Yeah, that's where I died at.
Oh, I see it's down there. That's where y'all going. They down there camping.
Yeah, see them bastards, they hugging that shit. They
Oh, yeah, they camping it. They flanking around to the left.
I got the money.
Okay, nice juke boots. I seen you, Jester. Jester put the juke boots on right there. Jester, juke boots.
Yeah, I'm gonna try to get y'all, bro. Nigga, what are you doing? Fighting people. You supposed to be getting towards the buy station. But I had somebody behind me, bro.
That's not what it looks like on the stream.
Well, okay. I know what I'm going up against. Then I got this bitch looking at me with the sniper over here. Traveling here and his door open.
I see smoking on.
Look at that ass. Frog man. Who was that? First. I'm ready.
All right, boys, on the bye.
Bird. Bird the word. Good love, man.
I'm not laughing. I might be like, I'm laughing for like a week or two.
Got the lab, man. I'm gonna get this one that's over here. This one. Oh, Nelson. Let's go. and I reach for the batteries, change them out, and throw a fucking cocktail on the ground and blow myself up, bro. I died in the fucking house over there. That's crazy, bro. Killed myself.
Girl, you died?
Damn, bro. Can I lose in the ghoul? Fuck!
And a nigga lost. We'll buy you back, no worries.
Now that shit pissed me off because they over there at the graveyard.
Okay, I see him.
Yeah. They had already hit the buy station. Go hit the buy station. To get my little come back in and get my money. Shit.
Fuck did I just watch?
No, they didn't just do y'all like that.
You see how quiet I was? I'm acting like nobody saw that.
Another fallen soldier.
Dead soldiers, I offer you a life for a life. Kill those across from you, and I will return you to your war. Die, and you will never leave my gulag.
I'm on my way to buy you back. There's somebody in there. Oh my god. Oh my god, bro. He instantly came around the corner, sprayed me. Trash right now.
Oh my god, somebody right there?
Hey, want to see my impression of a stock? I'm going up and down. In this video, I'll discuss stock investing and tools to help you get started. First, what are stocks? Well, you got chicken, beef, At its simplest, a stock is a share of ownership of a company. If you own a company's stock, you own a percentage of the company, a share. The more shares you buy, the more ownership you have. Companies sell stock to raise money, and then these stocks are bought and sold by investors, you, on the stock market. You don't have to invest directly in single companies. You can take advantage of other things like mutual funds
Don't worry,
and
boys, I got
exchange-traded
you.
funds. They can be a less risky way to invest because they allow you to diversify by
Yeah, I
investing
believe it.
indirectly in
I
multiple
believe it.
companies at once and across different types of assets like bonds and cash. But let's stick to stocks for now. Specifically, the pros and cons. Pro, they're easy to buy and trade. Con, they can fluctuate in price a lot for any number of reasons, so it helps to think long-term and check in on company news so you
Coming
have the
straight
confidence you
down
need
to get the
ride out
last
the
man.
bumps. And if you think you're on a loser, be willing to sell.
Oh, you got
Pro,
somebody flying in
unlike
right
other
there.
investment products, which can leave you cross-eyed with technicalities, they're relatively straightforward. If they go up in value, you make money. If they go down, you lose money. Con, if all of your money is invested in one stock and that stock moves, it's taking your hard-earned dollars with it.
Hey, he's
Which is
so
why
weak,
you
he's
should
so weak.
consider diversifying across different stocks,
Hey,
as
open that
well as
room.
different types of investments to reduce your risk. Another thing you can look for, some stocks pay dividends, which is just a fancy word for money. Basically, when a company has a good year profit-wise, they may choose to distribute some of that profit.
right here,
among their
right here, right here, right
shareholders.
here.
After all,
He hurt, he
you
hurt.
own part of the company, but not all stocks pay dividends. And even when they do, the amount can fluctuate or can even be zero, depending on a whole range of factors. So,
Get out of here.
put your nerd on and do your research. If you're interested in investing in a single stock, a good place to start is by thinking about how much you have to invest and what your risk tolerance is. Obviously, you want to make money, but it's good practice to only invest as much as you can afford to lose. You also want to think about how long you're planning to leave it invested and how it fits with your other investments. Not sure where to start? Start with what you know. Is there a company listed on the stock exchange that you use or believe in? Is there an industry that you think will grow in the future? You could also consider a sector like energy technology or healthcare or industries within a sector. For example, renewable energy is part of the energy sector, AI and
Damn.
cybersecurity are part of tech, and pharmaceuticals is
Oh,
a part of
that boy
health.
roasting Mars
Use what you
over
know to
there.
help make a decision you're comfortable with. Once you've decided what you're interested in, wait, research time. Some key things you want to know about a stock before investing. The general direction of the stock's price. Has it been trending up or down over the past few days, months, or years? How long do you plan to hold on to the stock? Is this a fling or a long-term relationship? Because price volatility may be less of a concern if you're holding a stock for longer. Volatility describes the market or a share price going up or down. If the stock is $100 one day, then $90 the next, then $109 the next day, that's pretty volatile. It's not always bad though. Day traders try to make money by taking advantage of wide fluctuations. But if you're just starting out or have most of your investments in one company, it can be nerve-wracking to see the value of your investment change so widely. So you might look for stocks that tend to be steadier or less volatile. Next, is there any buzz about the company? Is its stock price predicted to go up or down?
Dropping the 3 places y'all need them right here.
Well, hello everyone. Welcome to our 12 p.m. second session in our investor workshop today. My name is Dave Whitmore.
Oh.
I have the honor of beginning the process of talking about
Dang.
Hey, y'all like that?
in our first section.
Yeah, I did.
First section,
That's dangerous.
Aaron did a
Dangerous.
good
Hell yeah, baby, you're on
discussion of the
YouTube, baby.
foundations
We're
of
watching.
personal finance. Making sure we understand how to budget.
Live,
income,
right now.
expenses,
Across the way.
managing
Buy station.
You ain't hacking, are
Boy, you need to stop. You need to stop.
You look a little hacking over there, brother. Don't tell me you
Damn, hey, that boy was sitting
No,
up in the down
hey,
stream.
no, hey, I ain't hacking, no.
That's what this session is all about.
Stayed in that
I ain't gonna
dude.
admit
You
it, though.
stayed in that bit.
How does
It always gotta be somebody interrupting though, cause you gonna kill that motherfucker. Dead.
Following, we'll look at mutual funds and ETFs. Then we'll take a look at some platform stuff so you can get used to using the E-Trade platform for doing the kinds of things we're talking about. And then we'll finish the day with actually talking about making a stock trade and then looking at what else is out there. What are alternative investments? So I do want to bring up our disclosure slide and make one concrete point. Please don't take our conversations here as advice. This is education. There will be times when there will be perhaps real securities being shown on a screen. Those are being used as examples. Please don't take anything as a recommendation.
I'm not hacking.
All right, so let's talk about investing. Now, I want to sort of lay this out in 5 different steps. And the first question is why? Why should I invest? Then we'll talk about the building blocks of the kinds of investments that we'll see out there. We'll do a little dive into risk versus reward. We'll talk about building a portfolio, and then we'll finish out with the most important first step, and that is the process of funding your investments, getting money into a brokerage account and getting it working. So why? Well, the first reason is because of inflation, and right now this is a super strong point that is hitting everybody's consciousness. I've used this slide many times in the past when we had virtually no inflation, and so it wasn't as palpable as a point. But this is the first reason. If you just save your money in cash, the coffee, hackers, whatever,
let's go,
achieve any return. And therefore, its purchasing power will be reduced because prices will rise. Of $100 today, it buys you something. 2 years from now, that $100 is going to buy you less because prices have risen. So that's the first reason we invest. We have to achieve some sort of a return. But the real reason is because we're trying to reach financial goals, whether that's accumulating wealth, reaching retirement, funding education. These are the real reasons why we take savings money and employ it into investments. And so that's the why. But there's one more why. And that's because of the power of compounding returns over long periods. In our first session, Aaron showed an example of how compounding works, and in his example, he was showing 3 different investors that began their savings at different stages in their life and how their outcomes worked. Here, what I'm depicting is if you invest $10,000 today and achieved any one of the 5 interest rates that I'm showing here, 10, 8, 6, 4, or 2, then at the end of 25 years, you would have those. So if you achieve a 10% return for 25 years, you invested $10,000. At the end of that period, you have over $180,000. If you only achieved an 8% return, you would have $40,000 less. That 2% difference is really important. Small percentages over the long run are very
homie
important.
didn't reload, but it's either that nigga was hacking. That nigga on the live stream hacking. That nigga was shooting into that window, and I couldn't even see who he was shooting at. And that shit was saying hit marker.
Are high.
Said, I'm not hacking.
Pull down your return meaningfully. So that's why we seek low cost.
Boy, you hacking, boy.
Out to him. I pointed him out. I showed her what dude was.
In this picture, I also want to bring up something that my colleague Rick brought up in the first session. The rule of 70. It's a little rule of thumb. Good project project. What kind of outcome of an investment?
Yeah, there's a whole
the rule of 70.
guy landing right on you.
I take 72 and I divide it by 10. And that tells me that in 7.2 years, my $10,000 would become $20,000 if I achieve a 10% rate of return. And then you can see the rest of it here. It's simple arithmetic, but it just
not the pistol, bro.
The differences that small percentages make in your ability to reach a financial goal. So starting early and being in for a long period of time are vital steps.
Yo, you right there, Greg. What the hell?
Paying for retirement process. So that's the why.
These fools.
Oh, I'm about to die.
Let's turn to the nitty-gritty or more specific stuff here. We talked about 3 basic investments: stocks, bonds, and cash. So there are three basic ways that companies raise money. They sell stock to investors. Those investors then become partial owners of that company. When you buy stocks, when you invest in stocks, you can make big money, but you can also make big losses. Companies do go belly up. So you take on that risk, but you also have the possibility of investing along with bright people who create profits over the future, and your wealth builds along with them. And by the way, that's really how you make money with stocks, is the price going up. There are dividends. Some stocks pay dividends, some don't. But at any rate, that's the world of stocks, and we also call that equities. So if you ever heard the term talked about an equities, or this is an equity portfolio, that's just stocks. The cousin of stocks are bonds. And bonds don't represent ownership. They represent a loan. When you buy a bond, you have effectively lent money to a company or a government. When you buy a bond, you own a bond, and this is sort of like a CD too. You receive interest payments. Bond values can also fluctuate, but they generally fluctuate less than stocks. And we call bond investments the world of bonds.
So we can't go there.
Don't go over there. Them niggas
And
in
then
there.
cash is the third, and it is considered an asset class. But here, let's make sure we understand this. We're not talking about dollar bills. We're talking about savings accounts, money market funds, investments in very short-term, interest-bearing items like a money market account. Now, with cash investments, putting money in a money market account,
Stay in the air.
very low.
Green, and I'm gonna go down to get this.
Fluctuate. So, it's these are the building blocks of mutual funds, exchange-traded funds. Many markets like futures and options trade around the prices of stocks and bonds. So these
I don't know why when I looked at his name, I thought this shit said Trump lover. This shit say turn the block.
Of the investment world that we're going to continue to learn about. So let's look at those asset classes a little more closely. So we have stocks and bonds, but I want to make sure that we learn to not think about stocks as being just stocks, that there are very many different pockets of types of stocks, and it's important that we learn about these as we go along. So for instance...
Damn, he didn't fly to one of the things?
There are large company stocks, like companies that you probably know, the Googles, the IBMs, the Disneys, the Bank of Americas of the world. And there are small company stocks, many of which you probably have never heard of. The difference between large company stocks and small company stocks is important. And it is something that we will talk about more as we move along. Then there are stocks in foreign companies. Then there are also stocks that we call growth stocks, and others we call value stocks. Growth stocks and value stocks are different kinds of animals, and it's important we learn what that means. And then within stocks, there are stocks in technology companies, there are stocks in healthcare companies, and those are different kinds of industries as well. So stocks are not just stocks. There's a bunch of different types of stocks that behave differently in different environments. On the other side, bonds are generally divided or thought of in terms of who the borrowers are. So, for instance, U.S. Treasury, various governments.
I know it's some more money.
Companies issue bonds. Municipal bonds are local governments, like your school district or state bonds. Then we also look at bonds, short-term bonds and long-term bonds. The maturity length, the length of time in that bond is a factor of how we look at bonds too. We're not going to be talking about bonds much more here specifically.
Come on, you fucking camping pieces of shit fucking crackers.
Stocks and bonds. And now I want to clarify, in a way I fibbed a little bit because
I called them bitches over there. Fuck!
Of asset class, and that's called alternative asset classes. So for instance,
I'm gonna have to step away for a minute. I can't even get my shit together.
Commodities or crypto, for example, would be categorized as what we would call
trash right now.
Investments.
Is that?
So now we've learned a little bit about these different types, and you've already alluded to the difference in stocks and bonds. And I've said with stocks, you can have big wins or big losses potentially. With bonds, they're more moderate. And then I talked about cash being stable. Well, let's develop that a little more. So I want you to take a look at this data here. Here is the monthly change in the Standard & Poor's 500 index. So it's the monthly change. The purple lines are months where the S&P 500 was up. The white bars are where the S&P 500 was down for that.
Y'all still in here, but we're gonna play.
Now, when we see a bunch of data like this, one of the things we can do is apply a little high school math, depending on what level you might have taken it. But when we look at statistics, one of the things we do is we take the average of a bunch of numbers, right? So here, what I've learned is by averaging all of these numbers, I find out that the average monthly change was plus 0.78%. But that's not all, because if you recall, one of the other things that we can measure the average of something, called the mean, if you'll recall, is we can calculate what's called the standard deviation. Remember that? We're not going to do the math, but the standard deviation tells us about how much fluctuation is in this information. In other words, how much variation is there around the average? And so what we do is we do the calculation of the standard deviation, and then the application is that if we add it and subtract it from the average, we will capture about 2/3 of the values. So most of the time, the return is going to lie in that range. And then if we take two standard deviations, the assumption is that 95% of the time, the return is going to be within this range. The main point here is simply that this idea of measuring the variation in the returns of an investment from period to period is how we can measure risk in investing. So let's hold on to that now and turn to the trade-off between risk and reward. So imagine an investment. Let's say you've got money in a bank account and it's earning a low return, but it doesn't fluctuate very much. But you've come to the conclusion that you need more return. The 2% that you're earning here is not going to be enough to fund your retirement. So you need to move up in the potential return line. To get there, you have to accept more risk. And then if you have a risky portfolio that you're not comfortable with and you want to reduce the risk, you have to accept a lower return. This is like gravity in investing. It is an undeniable fact. If you want to reach for more return, if you want to achieve higher return, you are definitionally accepting more risk. Notice that there's a curve to the line, too. It can't go on forever. The idea that there are diminishing returns for taking more and more risk. So this concept is at the heart of so much of portfolio construction. The idea of making that pie, that pie chart that your investments are divided up into, and the why, which is where we're trying to get here. So now going back to our three little asset classes, we can see that cash is down on the low end of the spectrum here, bonds in the middle, and stocks up top. So now I want to dig deeper into stocks versus bonds. So there's an interesting relationship, and that is that stocks and bonds historically often move in opposite directions. So here's a period from 2008, and you can see in the beginning is the 2009 credit crisis stock crash. But take a look at how often through this period, when stocks are falling, bonds are rising. When stocks are rising, bonds are falling. But often the bonds are falling at a more gentle rate than stocks. These facts when put together, shows us our first step into building a portfolio. Now, I've just put up the performance table here for the bond that I'm using here, not as any part of my point, just to make sure that because I'm showing the investments in an ETF, I'm showing the historical return, but it's not really an important part of our conversation. So now it's build a portfolio. So take a look at a little hypothetical exercise that I asked the folks at E-Trade Capital Management to do. I said, I want to see a long-term period, and this is a 30-year period, where 5 different portfolios of stock and bond mixes, what kind of returns would I have received and what kind of risk or standard deviation would I have seen? So take a look. So first off, had you, in 1989, put your portfolio 100% in stocks, through the end of 2019, you would have achieved about a 10% return, and your standard deviation of those returns would have been 14.2%. Now you can do your math, add the 14.2 and subtract the 14.2, and that shows you that range of 2/3 of the time your result was found in that range. On the other end of the scale here is a portfolio of 100% bonds. And had you invested 100% in U.S. Treasury bonds, actually the Barclays Aggregate Bond Index, so it's just a general level of bond returns, you would have gotten a little less than a 6% return per year, but with much lower risk, standard deviation of only 3.6%. And now, what about the portfolios in between? Well, if we took that 100% portfolio and just put 25% of it in bonds, we would have received a return of 9.3%, and we would have reduced our risk measure, our standard deviation, down to 10.7. A 50-50 stock and bond mix shows 8.3%, and a 25% stocks, 75% bond shows us a 7.2 and a 4.6 standard deviation. And yes, there's that curve. And so here I've simply shown on a table what percent of the return you get and what percent of the risk you took on. And I think, a big story is just found in this first move here. Simply taking a small slice, a quarter of a portfolio, and putting it into bonds dampens the volatility of the portfolio meaningfully without giving up all that much potential return. Now, where one lies in these areas, which portfolio makes sense for you? Well, that requires us to talk about risk tolerance. So I just showed an example of just using a hypothetical portfolio of stocks and bonds. But remember, when we looked at stocks, we found that there were large cap stocks and small cap stocks. There were foreign stocks. When we talked about bonds, there were long-term bonds and short-term bonds. So there's more than just, a stark stock and bond mix. There's more that we can add to the pie to move the dial up and down this curve line. And so the question becomes, one of the key drivers of where you personally end up on this has to do with what is called your risk tolerance. Risk tolerance is something that is difficult for you to probably express right away. So one of the techniques is that a financial advisor or an online tool, such as you can find at E-Trade, will sort of walk you through a sort of Rorschach test of how you feel about risk and return. And so one of the techniques is to show you some examples, like which would you like best of these three. So here's a conservative allocation. You'd say, well, if you invest in a very conservative portfolio, and you looked at your portfolio a year from now, you might see you're up 15%, or you might see you're down 14%. But chances are you're up 5%. If you were to build a more moderate portfolio,
bitch, like I'm dumping the block.
with a little more risk, well, your expected return now is 7%, with the possibility of a big year being plus 24 and a small
It's
year
hunters and
down
50s
23.
and semis and autos and
Or-
fix y'all, I'm burning the block.
To move to more aggressive allocation, we would be expecting an 8% versus a range of 36 to 27. And so, as I said, online tools at E-Trade sort of quiz you in a variety of ways to sort of ultimately arrive at an assessment of what your risk tolerance is. And when your risk tolerance is assessed, and we know how much money is to be invested, and we know how much you plan to add to it, you can plan for reaching a financial goal. Those components come together to create a suggested portfolio based upon your risk tolerance with an expected return that should reach whatever goal you have established. And that's the process that a financial advisor would walk you through, as well as various self-directed tools such as we have at E-Trade. So that all results in the pie. And so here I am showing a hypothetical example of what would be called a growth portfolio, where most of the portfolio is in stocks with a smaller portion allocated to bonds. So here you can see the purple, the blue, and the green are the 4 slices of stocks. And as I'm illustrating here, having some large cap stocks, notice I've got most of the portfolio in large cap, some small cap, and then some investments in foreign economies. So I've diversified myself across company size and including some international diversification as well. In the bond portfolio, the portfolio is mostly long-term bonds, little bit of short-term bonds. If one wanted to tilt the portfolio to a more moderate allocation, then you're just simply going to, I'm sorry, I missed my talking point. At this stage, the vast majority of you would use mutual funds or exchange-traded funds for this portfolio. If you have large wealth, then portfolios can be built using individual securities. These are usually managed accounts where a professional will essentially act as a portfolio manager. Those are very, very large accounts. If you have that kind of money, you probably know about those services and might be interested in them. But companies like E-Trade have self-directed tools that you can use to arrive at a similar place. And again, those tools are always going to use mutual funds and ETFs. And that's why our next session following is to delve into mutual funds and ETFs. And so on the next slide, you can see I've now dialed the allocation of stocks lower. So now we're holding 60% stocks, and we've upped the allocation to bonds. And the bond portfolio now represents 40%. And then if we were to be very conservative, income-oriented, perhaps someone in retirement who no longer needs as much growth in the portfolio but is more interested in capital preservation and stable value and income, well, then we start tilting that portfolio to a greater allocation of bonds. So this is all about the foundation of investing, the why, really. The next part is the process of actually making those investments. So understanding the benefits and the differences between mutual funds and exchange-traded funds, the processes of actually buying stocks, which we will go into. So we'll continue on that path. But at this point, the next thing that I want you to be sure of is how to fund those investments. Because one of the things that we know is that new investors often open an account, are not quite sure what to do, don't fund the account, but then at some point later on decide, okay, I'm going to invest now, and then they then have to go through the process of getting that account funded initially. Because the initial funding, it's a couple of days. So let's show how to do that. And then I want to talk about something that you might have heard of called dollar cost averaging. So to fund your E-Trade account, you simply go to the little transfer tab up here, and when you click that, you will see a drop down allowing you to transfer money, do wire transfer, transfer brokerage accounts, all the various ways of moving funds or assets around. And you'll come to a page where you have a variety of ways to transfer. And one of the things that you'll want to do is
What
to
the
set
fuck
up your
is
bank
going on?
account. So
Everybody back out and
this is
reset their game and come back to the
using
lobby.
what's called the ACH system. It's much like what Venmo and PayPal use if you are a user of that. The idea is that the money moves electronically, but it doesn't. It takes a couple of days. Typically, with my bank, if I ACH, if I transfer money into my brokerage account, it's usually there the second day. And same thing if I'm withdrawing money. The same function here allows you to move money back to your bank account. So you set up your bank account, and then any brokerage accounts that you also have will be in here, and they will all be in the Transfer To button as well, Transfer To menu as well, so that you can move money back and forth and very efficiently. Now, as I mentioned, an ACH transfer does take a couple of days for the money to move. Verifying your bank account can take a couple of days too. So the initial funding, allow your, start it on a Monday and expect that it's probably done by Friday. Okay, and once the money's secure, then you're ready to go invest. Now, if you do have an urgency, you can use what's called a wire transfer. Wires are real time, same day. So if you are attempting to make an investment today, if you get to your bank in the morning with proper wire instructions, which you can get from our website, they should be able to get that into E-Trade and in tradable funds that same day. Now, your bank's probably going to charge you for a wire. We're not going to charge for an incoming wire. It'll come in free. But if you want to wire money out of your E-Trade account, we charge for that too. So ACH transfers, electronic, free, but not immediate. Wires are available for same-day funding. Got to talk to your bank about their policies on it. And it's not free. There's a cost. I think we charge $25. You should check with your bank on that. The other thing I want to make sure you sort of explore a little bit on this page is the Other Services tab. Because there's a whole slew of banking functions and cash management functions that you can utilize for your E-Trade accounts. With bill pay, you can have a checkbook. You can
All right, let's try this again.
Get a debit card, make charitable contributions, make your IRA contribution, make a distribution, all of those things. But two of these I want to draw a little attention to. And the first is direct deposit. Obviously,
Ça, j'ai entendu. J'ai entendu. J'ai un
how
petit
about
don.
treating it much like you would your 401k and set up so that when you get paid a few $100
Comme toi.
into your brokerage account
Quoi?
on a steady basis.
Moi, je suis offert comme toi.
With that,
Hey,
you can then
on s'entend deux.
so you select a group of mutual funds or a mutual fund.
Attends un peu, par exemple.
Periodic,
Faut que je monte ma lâche.
When that money hits, it automatically gets
Ah, mais je m'entends deux.
the fund that you chose. And that is a great way to create a disciplined, steady flow and into a diversified investment. And that's a very prudent and practical way to get started. And it doesn't have to be a lot of money. $100. If you make more, then make it 1,000. But that's the idea of running sort of something parallel to a 401k plan that you would probably already have going. And that leads me
Moi, je vais prendre ma Castove.
theoretical.
C'est bien ça, Castove, pour avoir la Vesnec, hein?
La Casta, il y en a plusieurs des Casta.
The math behind something, and that's
Ouais, j'entends un peu.
cost averaging.
Je m'entends deux, c'est bien tant.
Mentioned. We'll have time to do questions.
Yeah.
This is a scheduled 45-minute slot. Coming toward the end, so if folks have questions, you can put them in there. I do know my colleagues are back there.
Comment je
Maybe
fais?
some of the ones that have already been answered, they might want to throw them in here so that we can talk for a moment or so. But let's talk about this dollar cost averaging thing, because sometimes you'll hear about dollar cost averaging like it's magic, like it's this great thing
Okay.
that produces profits. Well, look, it can. There are circumstances dollar cost averaging benefits greatly. But there are also situations where a dollar cost averaging will lag what we call a lump sum investment.
All right, boys, let's lock and load. Let's get this W.
So imagine
On the move.
an investor who decides, I want to get $2,500 invested, and I'm going to do it by investing $500 a month for the next 5 months. So the stock we're looking at is a $50 stock, so his first purchase was to buy 10 shares, and we're going to call this mutual funds. There's no name here, but that's going to allow me to use fractional shares. So we buy 10 shares at $50, and we have $500 invested. And now, each month, we take our $500 and we buy whatever that buys us according to the price of the stock. So the following month in February, the stock's $40. So now I buy 12 and a half shares. In March, the stock's 30. So my $500 buys me 16 2/3 shares, and so on. And so in this case, at the end of the period, the dollar cost averaged account has invested $2,500. The account owns 64.57 shares. That's just me adding up the 5 different amounts. The average cost is $38.71 per share. The stock is now 45. So the current value of the 64.57 shares is $2,905.65, and our dollar cost averaging investor is up over $400, even though the stock is down from when he originally bought it. The first trade was 10 shares at $50. The stock's 45 now, but I'm up 400 because I was also accumulating it at lower prices. We want some investor, and that's someone who takes the whole $2,500 and puts it into the stock on day one, would have bought 50 shares at $50. The current value of that is now $22.50. So the lump sum investor is down $250. So in this case, the dollar cost average wins. What about here? Here we're looking at the stock is $30. So my first purchase is 16.67 shares at $30. And then the stock goes through a pattern like this. So now my dollar cost average is $2,500 invested, 64.57 shares, same amount. Average cost is $38.71, but the stock, the current value of the stock is now a loss because I was buying shares up at prices higher than 35. So my average cost is 38, the stock is 35. So by dollar cost averaging, I'm down a little bit. In this case, the lump sum investor wins. He put the $2,500 in at $30. His shares therefore are 83.33. The stock is $2,916. The lump sum investor wins. What about rising prices? Well, let's start at the same price. And now you can imagine that the stock, that the fund rose the entire time. Well, you're probably ahead of it. In this case, the lump sum investor is going to win because he put all of his money in at that low price of $30, and it's now 50. The dollar cost average investor is still up, but the average is now more in the middle of that. You know, the average price is $38.71. The stock is 50. So even though dollar cost averaging still produces a profit in this scenario, the lump sum investor that wins. And then the reverse happens in falling prices. In falling prices, what we're going to see is that the lump sum investor takes the brunt of the loss. The dollar cost averager has a loss, but because the average cost is more in the middle there, $38, the dollar cost average account takes less of a loss. So the point here is simply dollar cost averaging isn't magic. It isn't foolproof to profit. It does stretch out in investments and in fluctuating investments, especially if you get a dip in prices where you continue to buy, then the dollar cost averaging strategy can come home with more power. So, there's the better. So, I said before we were looking at the return. Cliche quote in investing. And it says it's not timing the market, it's time in the market. And it's making a decision to buy or not to buy, or to get out when you think, oh, I have to liquidate now because I'm afraid, can often result in wrong decisions. So to sort of illustrate that, I want to go back to that chart I showed earlier. Because what I've done here is highlighted 4 big, huge months. September of 2015, S&P 500 up 8% that one month. January 2019, up 9%. April of 2020, up almost 17%. July of 2022, up 9%. And notice, as I've highlighted it, that those almost always come directly on the heels of drops. What this illustrates, or what this tries to drive home for you, is if you will act with fear in a diversified account that's goal-oriented for the long run because the market fluctuates, you're going to sometimes find yourself liquidating positions at the wrong time and then missing out on those big months. And there have been study after study that show that if you miss out on big years, big periods, because you get out of the market out of fear and don't get back in until after the big back-to-back move, that can really destroy you. Missing out on the days is a very important part. And that's why staying the course. And that's why being diversified and sticking with it and having plans to add money to it is a successful way to achieving that goal on that path that we're trying to get to, whether it's our retirement or education funding or simple wealth accumulation. So, my takeaway, well, time, diversification, and disciplined savings all go together to create powerful factors for you to reach your goals. We haven't talked about what you invest in yet. That's coming up next. We're going to start to explore, looking at the E-Trade website, talking about some of the tools for mutual funds and exchange-traded funds, the appropriate slices for the pie that you're baking. Let me invite my colleagues, if they would, to see if we can do a little Q&A. It's 12:38 Eastern Time, and we are scheduled to go till 12:45. I'll try to hold it to that because we do have another session coming up after this.
Yeah, Dave, and I'm actually kind of disappointed because we've got so many good questions. We could go easily 20 minutes on it. So real quick, this is great information. Both sessions, I think, are really dovetailing well. Is this being recorded, and where can people get that? And can they share those recordings with other people, even if they don't have E-Trade accounts? Can you talk about that real quick, and then I'll hit you with a couple of specific questions.
Folks, if you go to etrade.com/events or etrade.com/workshop, you'll be able to get to recordings of the things we do. And these will be available there. Also, in all of these sessions, where there is a slide deck being presented, it's available in the resources widget. That's the green widget directly below the screen that you're looking at now. You can click that, and a copy of our slides are available there. As far as showing this to other people, you are more than welcome to forward links to these. There's no charge. This is not clients. If you have, we've seen many comments here from folks wanting to show these sessions to their college-age kids, which we certainly endorse. In fact, I just said after that first session to one of my colleagues, I said, I wish I'd been shown this when I was 22 years old. Things quicker. So you bet, you certainly can. I did see a question in there about the mix and achieving the right diversification. It was from Rebecca, achieving the right diversification with small amounts. That's a good point. But remember, with mutual funds, you can buy fractional shares. So you can invest the specific dollar amount. And in many cases, more and more ETFs are getting into our automatic investing program. So there are ETFs available there, and the ability to do fractional shares in those makes them much more useful for that. But you're right, Rebecca, that's a good thing to point out. And then the other thing to think about is that your mix, the stock bond mix, is likely to change over time. If you're 28 years old now, starting
that
off.
was a
Your
little
mix is going to
different.
be mostly
That's
stocks
kind of
with a
like
little bit
almost like a
bonds. If
warm
you're
up kind of job.
65,
When you need a
and
good warm up,
deciding
you
how to
want to play
manage
with your own
into the next
guns.
25 years of
It's
your
kinda
retirement
fun.
life,
You
maybe your mix is a
something
little
different.
different.
Okay, so we haven't gotten into actually putting the money to work, but I'll be handling that in the next 15 minutes here. The question from Gerardo is, can the current value be withdrawn at any time? And I hate saying it depends, but generally speaking, this is not like a CD where you're locking up money. Can you talk just a little about it?
Right.
What if I put my money into the market? Generally, what if I decide I need to get it out? What does that process look like?
Well, first off, the first question is, are you opening what we call just a brokerage account, which doesn't have any tax benefits, or are you opening a retirement account, an IRA or a account? Those have tax structures around them. So taking money out of an IRA, because you got a tax break putting in, you have a taxable event coming out. So that's one question. But then the other question is, so I've invested in a mutual fund and I've decided I need to sell it. Can I? Well, yeah, it's an investment that will fluctuate in value, and it may be worth more than when you bought it. It may be worth less than when you bought it. But if you do need to, quote, withdraw the money, you have to sell part of that investment, and some or all of it. So maybe you're just going to sell part of it to withdraw some cash. But remember, when you're making an investment, you are taking cash and deploying it into some thing that you're buying. To get that cash, quote, out means selling some or all of that thing. But I would also suggest that if you invest some money and then a short time later determine you need to sell to get out, then it probably, you didn't establish the stuff we talked about in the first session, making the foundation of the personal finance with the proper amount of savings, the proper understanding of risk, and only moving into investments when that money can truly stay deployed in investments. So if you found that you need cash, then I would suggest that you probably should have been doing something else with that cash, like paying down debt or building an emergency fund.
What made you want to mow the yard by yourself, bro?
Watching Aaron's first session, I think
I just got up and did it. I've been wanting to do it for a while.
Okay, got a little bit more time left. Floodgates open.
Appreciate it.
Question.
Oh, no problem. Motherfucker, rain and shit, though.
Too, but let me throw this question your way. Christina says, what does all this mean in a bear market, which we are clearly in right now? Now, of course, there's pros and cons to being in a bear market. You just talked about dollar cost averaging. You want to?
My dad's gonna shit when he sees all this.
Bear market is good.
Oh, yeah.
Bad. Where are we at here?
Well, nobody knows where the market's going next. I don't know where it's going. I just know that over the very long run, investments in U.S. stocks have produced returns better than the other things. You know, in certain short-term periods, they underperform.
Oh, where are we going?
Draw down.
See?
But over the very long run,
What?
it's produced a return and reach these types of goals. I don't know when the market's going to turn. And if you're investing in funds in a prudent way in a diversified portfolio, you shouldn't be doing that either. Now, I see a lot of questions.
I'm in C.
Beyond the level that we're talking about today. So, for instance, someone just have a question about how to use a stop order. Those are things that we do in our more advanced trading education topics. And if you go to etrade.com/events and scroll through the session on stocks, you'll see lots of related things about how to understand the various order types and how to use them, how to read charts. At the end of this session, we're going to talk a little bit about stocks, but not to that degree. But we'll give you a foundation.
Damn, somebody got C. Somebody didn't see. Son of a bitch.
Pattern day trading, and I just want to say that also is way beyond our discussion here. So we're at 44. Sean, is there a single question I should try to put a coda on here? Or?
Yeah, I think this will kind of segue to the next one. Jordan says, how do I know, well, we don't know anything, but how do I know if dollar cost averaging or lump sum investing is the right approach? Should you choose one method or the other based on your own needs or what's happening in the market? So that's kind of where we're going the rest of the day here. You want to wrap with that one, Dave?
Well, as my four examples showed, the winner of lump sum versus dollar cost averaging depends on the course that the price of that thing takes over that period. And there's no way to predict that. So I think the real question is, if you have the 2,500, it probably makes sense to just get it invested.
What the fuck?
If you don't have the 2,500, and you're doing it on a monthly basis because you're doing an automatic.
Oh man. I was trying to 2 or 3 of them.
Realize the possible outcomes of that, given the path that the investment takes. There's no right answer. And again, if there would be a right answer if we knew what the market was going to do for that period, but we don't. Folks, I really appreciate the conversation here, and we're really excited that so many people.
Oh my God.
Investor Workshop. We're really trying to get to the foundation of for those investors that are like, how do I do this? What do I do next? That's what we're trying to work through here. So in a very methodical way. For those folks that
What the fuck ever, dude? My fucking chute didn't even open.
Stick around. I think my session in
God damn it.
in the afternoon you'll find interesting, although it is still basic level. But again, go explore our eTrade.com/events. We've got a ton of webinars on more advanced stock trading ideas intended to be elementary school, if you will, and we'll talk about that as being high school and college. So remember, next coming up is Sean doing Mapping Your Path, Mutual Funds and ETFs. And one more thing, we have a survey. It'll pop up in a separate window, I believe, when we shut down here. Or you can bring it up in the widget below. It's the teal-colored widget. We would really like your feedback, especially if you are newer.
There's no way.
Investment education webinars. If you're a newer investor, and if you're newer, really like your feedback. I can promise you, our team reviews those, talk about
This game pisses me off.
what we can do better, and what content we might be missing, and it greatly impacts the stuff we create. So really would appreciate it.
On the other side of that car.
Thanks again for joining us. In 13 minutes, Sean Howell up with Mutual Funds and ETFs.
He's an H.
Holding down C or whatever I'm on. Oh. No, Curtis. Oh. On me. Yeah, that shotgun pisses me off.
God damn it. I had a echo for a second.
Curtis, did you kill him?
Killed the guy on top of the roof.
Comes around Curtis, I'll try to kill him.
He's getting his buddy. Oh, never mind. That wasn't his buddy.
Damn. There's land from everywhere.
Right on your ass.
What the freaking crap?
Ah, and I got somebody right fucking behind me too.
It's like I know more than land and I'm dead.
Welcome, everyone. Welcome to Mapping Your Path, Mutual Funds and ETFs for the long term. This is Sean Howell. I'm taking the third session here. We're going to continue down this pathway. Aaron and Rick kicked it off with just a great session, kind of getting you thinking about things like saving and credit scores and managing debt. And then Dave was talking about just the overall, why do you invest? What's the approach? Rule of 72, getting started earlier, dollar cost averaging, all that. This is the first session where we're going to talk about actually putting some of that money to work. So one thing I want to explain is that mutual funds and ETFs, although the vehicles are complex, kind of what the entity is a complex thing. Getting started with these things is simple. It's easy. So as I've walked you through it, I think you'll see just kind of how simple it is. But there are things that you need to know, need to understand, and need to make decisions on. So I'll also be going back and forth. This is the first time that we're doing this in today's sessions, at least, where I'll be going from PowerPoint, and then I will be switching over and sharing eTrade.com to illustrate some of the points, and then I'll be switching back. So heads up that you may need to go from the slides, like you're looking right now at the disclosures. You may need to go from the slides and switch to the media player. It should switch for you, but if you hear me saying something like, see right here, and you're not seeing there, switch over to the media player. And then as I go to wrap, a couple of quick reminders. Please look in the upper right-hand corner. We want you to just
Goddamn, watch out, he's in there with a fucking dragon.
session, which is going to be Rick in that case. But also the survey pops
Here we
up.
go.
Let us know how this worked for you. Let us know what it is that you need, because we understand that you're on kind of a path. As I'm going,
you're good.
Because I'm going from slides to an actual presentation.
I was like, wait a minute, dude. I know he knows them down.
Not because I'm thinking they're the best or you should put your money. I'm picking them because they illustrate my points. That's it. No recommendations, no advice. I just want you to understand how to utilize the tools, and that's what this disclosure is about, and that's what this other disclosure is about as well. So with that being said, I've got
one down inside.
3 minutes, and we'll see if there's time at the end to answer some questions, but let's go ahead and dive into the material. So here's my agenda. First of all, I want to explain what a mutual fund is, and then talk about some of the things, the pros and cons of it. And then I'll compare and contrast that to an exchange traded fund. I really enjoyed Aaron's little sidebar with Rick talking about when he was an MBA student, and he started with an E-Trade account, and it was a small money account, and that's sort of, as he was learning, he started to put some of his learnings and some of his money into the market. Well, we all have to start somewhere, and I appreciated him saying that because I started somewhere too. Now, I started right out of college I'd gone overseas, and I'd made some money. I was an English teacher in Japan, and I'd come back to the United States with some savings, and I wanted to put that money to work. While I was in Japan, my parents were sending me care packages, and in those care packages, I was asking them to include a couple of copies of Money Magazine that I had missed out on. So when I came back to the U.S., I knew about diversification, I knew about controlling debt, I knew about savings, I knew about dollar-cost averaging, because I've been reading those. But I wanted to put those to work, and I didn't want to pick individual stocks, or I didn't want to use complex things like options, because I didn't know anything about that. So I wanted kind of the heavy lifting to be done by getting into mutual funds and ETFs, and that's where I started. If you ever attend any of my other sessions that I teach the more complex stuff. I teach the options, but I didn't get started with that. It was many, many years before I decided to go that route. You may never decide to go that route, and that's perfectly fine. There's nothing wrong with mutual funds and ETFs. So let's get into the pros and cons, as this may be the right place for you to start. So it's important that you understand what they are, so you can make that decision as well. Okay, so the basic characteristics of mutual funds is it's a basket of securities such as stocks or bonds. So Dave was just talking about kind of having that mix between stocks and bonds. If you're younger and more aggressive, you're going to want to have a heavy mix of stocks. As you get older, closer to retirement, you want to have something that is less growth-oriented and more stable, and that may be bonds. Instead of picking all these individual stocks and bonds to create that mix, you can pick a basket of those that are already sort of pre-mixed for you. Now,
We win.
Yep.
Never won.
A proportional share. So we're pooling together. I should.
Yeah.
The fund is pooling.
By quite a bit, to be honest with you.
And then with those assets, they're going to be investing it into various instruments, and that's what we're saying here with the third bullet point. The investor funds are pooled, and they are professionally managed by people. They are making decisions on behalf of the investor. Now, this is going to be different than when we get into... hey, Dave, let me just ask you real quick. Is my sound coming through okay? Do I need to switch in any way, or are we okay?
You sound okay to me.
Okay, great. Thank you.
Okay, Jessica
so
got
everything
the plug,
is pulled together and invested, and then it's managed. A lot of times I hear from people just getting started, when do I know what I should, when do I know when to get in, when do I know when to get out?
Yep, you got one right back.
On all these various stocks, what should I be looking at? Charts? Should I be looking at their balance sheet? What should I be looking at? Maybe don't worry about that, because when you get into a mutual fund, they are being managed by professionals. Now, those professional managers are getting compensated for managing it, and that is going to be part of the expenses associated with that, and I'm going to talk about it. Now, there are thousands of funds available at E-Trade, and I'm going to show you that in just a moment. Now, it's targeting all sorts of asset classes. So if someone comes to me and they say, I'm interested in getting into something like clean energy, how do I do that? Well, one of the ways you could do that is just getting into a mutual fund of clean energy. Therefore, you don't have to become the expert in clean energy. The mutual fund management team will be the experts. They'll do the research, and they'll decide which ones to get in and in what proportions to get in. So that takes a lot of that stress off of the individual investor and handles a lot of the heavy lifting associated with it. So with every single investment vehicle, there are going to be things that you gain and things you give up. So let's talk about the investing pros and cons of mutual funds. Mutual funds have pros and cons. Here's a few to consider. Diversification. A single investment, let's just say $500, is going to be spread across a basket, and that basket could be stocks, bonds, or both. So it could be totally concentrated in stocks, and those stocks could have themes to them. They could be large companies, small companies, all companies. They could be international companies. They could be focused on things like green energy. They could be focused on things like banking and finance. You can really kind of choose the flavor that you want, or you could choose something that's very narrow or very broad as well. There is a professional management team that is going to determine the investment mix and the timing of trades based on that strategic theme. So as I mentioned, if you're looking for something like clean energy, you don't have to become the expert in that. The management team, that is what they focus on, and they decide how much of the pool of funds that you have bought into are they going to allocate towards company A versus company B? And hey, what about rising company C? Should we sell some of A and should we go to C? So on and so forth. So it's professionally managed, which means that you can focus on other things besides managing those individual funds. Now notice here that I say lower fees. Very often people think that they need to have a person, they need to have an individual financial advisor managing their money. Well, you can certainly do that, but you're going to pay a fee to that person. Whereas if you pool, since you've got this pooled asset that are being managed by professionals, it's usually a very large pool. So they don't need, in order to put food on their table, they don't need to necessarily collect as much in fees because of the size of the pool that they are managing. So therefore, there are generally lower fees with mutual funds than with going with an individual personal advisor that would give you bespoke guidance. So there's both a pro and a con.
Yeah, you're not
One
in.
is you're pooling your money together, getting lower fees, but two, your situation may be different than the other people that are putting their funds into this particular mutual fund. So lower fees, and when I get to exchange-traded funds, I'm going to talk about the lowest fees when it comes to something like this diversified product. And here's another point. It's convenient. So choosing your own mix of funds can simply help to build a diversified portfolio. It's very simple, and I'm going to show you exactly what that looks like. So these are kind of considered, for me to be, hey, I want to get my money in the market. I don't want to have to learn all the things that you guys teach. But I also don't want to go out and get a financial advisor and pay he or she a higher rate to manage my money, but I want the diversification. I want the simplicity, and I want the convenience. Let's talk about some of the cons or the downside. Some mutual funds have high expense ratios. And what I mean by a high expense ratio, these are basically fees that you're going to be paying. Let's say that an average fund is 1%. If that fund was able to get you, let's say, 7% in a year, but that was the return, but 1% of that drops it to 6%. Well, Dave talked about the rule of 72. That 1% is going to change the amount of time that it takes for you to effectively double your money, grow your portfolio, hit your targets. So every single percentage point counts, and it's working against you. So yes, you've got people managing your money, but they do want to get paid. So the management fees, if you were looking at Fund A, which is 1%, and Fund B, which is, let's say, 0.75%, although those 25 basis points or the quarter percentage point doesn't seem like it's a lot, if you're going to own that fund or invest your money over 5, 10, 15, 20, 50 years, that 25 basis points adds up, and it's taking away from you getting to your goal. So it's important that you recognize the expense ratio and the fees. Some funds, in fact, will charge what they call a load. But really, a load is nothing but a commission. So do you need to get into a loaded fund? Not necessarily. There's a ton of no-load funds that also have some low fees, and I'll show you how to find those as well. Well, the performance of mutual funds, many passively managed funds fail to beat the benchmarks they measure themselves against. So if there's a large cap fund, a mutual fund that's going to invest in large companies, and that can be compared against a large cap index like the S&P 500, which is the 500 largest publicly traded companies in the U.S. market, don't be too surprised if the S&P does maybe 8% in a year, but your mutual fund does 7%. Wait a minute. If I would have just put my money in the S&P, I would have gotten 8, but here I only got 7. Why? Well, remember, that 1% maybe that you are paying to the management company is going to detract from your gains, or it's going to add to your losses. But at the same time, you're not the one that has to manage that. Now, ideally, what you're hoping to see is that by having it actively managed and diversified, that if the index, the S&P, does 8%, that the fund does 9%, including the fee. That would be great. That would mean that the active managers were getting you something higher than that, and we call that alpha, the ability to manage the money and improve upon what would have happened if it was not actively managed. There's uncontrollable tax events. See, because what's going on in a mutual fund, the managers are buying and selling much like a more active investor would do in their own account. They are accumulating transactions, and those transactions, some of them they're making money, some of them are losing money. Ideally, they're making money. But at the year end, the mutual fund needs to pass through to the individual investors some of those gains. Year-end capital gains and dividend distributions can surprise you at the end of the year because you're going to pay taxes on those. And it's not something that you're going to know until you get to the end of the year. Whereas if you were managing your own stock portfolio, well, you'll know that you bought a share at $100 and you sold it at $110, and therefore you have $10 of gains. You'll know if a company that you bought for $100 paid you $1 in a dividend each quarter for a total of $4. So you'll know that because it's right under your nose. So uncontrollable tax events are something else to be aware of. The other thing, and again, I'm not going to say this is necessarily a good thing or a bad thing because I do trade. But when I first started, I didn't trade at all. I invested. I put my money in. I let the market do what it does, and I had mutual fund managers deal with it. There's no intraday trading. You buy and sell mutual funds after the close of the market at something called the NAV, which is the net asset value. And that's the number. So let's say at noon, you decide, I think I'm going to put $500 into mutual fund A, B, C, D, E. Well, you put it in, and then you don't know what price you pay till the end of the day because all the different entities, all the stocks and bonds that make that up will get calculated up, and that will give you the net asset value. So when you buy a mutual fund, you buy in dollars, and that then gives you shares. And then maybe you say, hey, my kid's college tuition is kind of coming up. I need to liquidate $500 worth of mutual funds. Then you need to kind of figure out the number of shares that you would need to liquidate. And then you would say, hey, sell 20 shares of the mutual fund because I need to raise about $500 to pay towards my kid's college tuition. When you sell that, then at the end of the day, the net asset value will be calculated, and maybe it comes out to be 505 or 495 or something like that. So a little bit different when it comes to mutual funds. We buy in dollars and we sell in shares. Okay, let's switch over to eTrade.com and let's take a look at some of the mutual fund resources and exactly how we would approach them. Okay, I have already logged in to my demonstration account. And I will zoom in so you can see some of the things. So I've logged into my demo account. It's a live demo account. It's got a little bit of money in it here, and I think one share of a small stock that I went ahead and picked up this week as a demonstration as well. So where I'm going is across the top you have accounts, trading, markets, and ideas. And I'll zoom in so hopefully you can see. And if Dave or Rick, if there's any issues at all, please let me know since I can't keep my eye on the chat in the Q&A. So I'm at Markets and Ideas, and you can see we have, okay, great, thank you. I'm dropping down to mutual funds, and then next I'll go to ETFs. Now, where I live and breathe is this option section. This is what I do in stocks, but that's not where I started. I started here with mutual funds and ETFs, and it was an easy, comfortable place to be and a great way, I think, to get started. I'm clicking on mutual funds, and I'm going to kind of go through a process here of showing you some things. Don't feel overwhelmed as I start, because I'm going to conclude with pre-built portfolios and showing you just how simple this can be. So first of all, let's start with the fact that we have thousands of mutual funds to select from. That right in and of itself is daunting. How do I pick which one I want? Well, we try to narrow this down for you by creating things like the All-Star List. And the All-Star List is going to contain mutual funds that we consider. We've gone through and we've pre-screened them, and you can download it here. There's 179, down from 6,000 and something. But we have screened these, and they have lower expense ratios in their performance. And let me just compare a couple for you here, and you can download it right there. You can see when this was uploaded. Now, across the top, we have things like domestic large. This would be U.S. large companies. Then we've got domestic mid and small caps. So not the big giant companies, but the smaller companies and the littler ones, international, fixed income, balanced sector, alternative, and other. So I can go through, and let's say that just getting started, if I just wanted to get my money to work and I wanted to do that in something like a large company, well, let's slice and dice it a little bit further. Are we looking at a large blend? So, well, let me compare and contrast this. Or are we looking for large growth? Growth is going to be something where a company is doing what they're doing, and they're taking whatever money they're making and generally rolling it back in instead of sharing in their profits with the individual owners, i.e. the people that own the stock, i.e. you, if your mutual fund has bought into that. So we've got growth, which is where it's all getting tied back in again. And then we've got things like value. And again, you can see things like a dividend growth. Well, this would be a mutual fund that is investing in companies that have both growth and dividends and paying them out. Now, a couple things across the top. NTF stands for no transaction fee, right? We're trying to keep our expenses as low as possible. If I go over to the right, we'll see something called an expense ratio. Think of this as fees. So remember, how are we paying the mutual fund managers? Well, we're paying them in our expense ratios. So if I take a look down here, I can see this one is 0.59 as the lowest and 0.85 is the highest. Okay, there is a difference between those two. So let's see how that would sort of look as far as performance. Well, if I look at the one-year return, you can see everything's in red. We all know the market is down, so that shouldn't be a surprise. But you want to be able to compare and contrast things like the 3-year return versus the 10-year return. All of these are how well does this fund perform. Now, let's say that I was attracted to the one that had the lowest fee, even though it may not have the highest 10-year return. Let's just click on it and get a little bit closer. And here's a little tip for you. When you see a mutual fund symbol, it's usually 5 long, and it usually ends with an X. So if someone says to you, hey, I just bought this great stock thing, and the symbol is CXXAX. When you hear that 5 symbols and you hear an X on the end, be thinking, oh, sounds like you got a mutual fund, and that's exactly what somebody got. So I clicked on it, and now I'm going to take a real quick look. And again, I just picked this one randomly here, and you'll see across the top, we've got a price. Now, that's the net asset value, and you can see that net asset value would be as of the close yesterday, because we don't know how this fund is currently doing today, and we won't know till later on. I've got my snapshot. We've got things like public offering price. That's the price that it was previously. We can see the expense ratios. We can see their distribution yield. We can see that it's open. And then over here on the right-hand side, sales charge. Remember we talked about loads. Front-end load, it's waived at E-Trade. Great. When do I need to make a decision if I'm buying or selling? I need to have that decision in by 4 p.m. Eastern, which happens to be the market close. And then let me go just a little bit deeper in. What if I just want to get a glance, like what kind of stocks are in this thing? Well, I went ahead and clicked on portfolio, and then let me scroll on down, and this will give you an idea. What is this thing investing in? Well, 99% of it is going into stocks. Okay, remember Dave was saying there's that mix of stocks versus bonds? This is all stocks. There's no bonds. Are you younger? Are you more aggressive? How much time do you have? How is this going to be in your mix? And just to get a flavor of some of the companies that are in it, look, it's a large cap fund. It shouldn't surprise you that you know all these names: Apple, Microsoft, Alphabet, Google, whatever they call themselves, Amazon, Tesla, Nvidia, JP Morgan, Visa, Procter & Gamble, Home Depot, so on and so forth. Now, with active management, this could change. So the manager may say, yeah, you know, Microsoft's earnings just came out yesterday, and maybe I'm going to switch. I'm going to sell some of the Apple to buy more Microsoft, or maybe I'm going to sell some of this to buy some of that. They're making those decisions for you. You're generally along for the ride. So let me go back here real quick. So with mutual funds, again, there's a ton of choices, but let me dive in just a little bit deeper on it. And I'm going to go into the mutual fund screener. Now, I just came back from a trip to Cambodia and Vietnam, and I just saw, you know, the amazing growth opportunities in Phnom Penh, in Ho Chi Minh City, in Hanoi. So maybe I'm thinking, you know, I wouldn't mind getting involved in, I wouldn't mind putting some money towards Asia, but I don't know enough about where to put my money. So I can go through and say, let's see what kind of mutual funds maybe I've got access to. I'm going to clear them all, 6,662. And maybe I say, well, I want an all-star fund. I don't want to pay any loads. And I'm going to drop down and just say fund name. Let's see if I can find something that has Asia in it, right? Well, there, I found one right there. I found the Morgan Stanley Institutional Asia Opportunity, MSAUX, all-star list, right? Well, I screen for that, and I can get involved with this no transaction fee. Great. If I wanted to buy, I would simply hit buy, and that's going to load up my window. And remember, we talked about this with mutual funds. You buy in dollars, whereas with exchange-traded funds and stocks, you buy in shares. But when you sell mutual funds, you'll sell in shares, and I could go and preview the order and move forward. Okay, that's a little bit of the deeper dive. I'm going to go and show you something that would be a nice starting point. So we've got the All-Star, we've got the screener, we can compare mutual funds side by side. We could go into specific categories and look for top performers. I could do that with screener as well. But I like pre-built portfolios for the sake of simplicity. So let me show you what I like about this, and it really feeds into what Dave and Aaron were talking about. Our analysts selected leading mutual funds with no commission fees and created 4 diversified portfolios that may fit your investing goals. It was showing you the mix between, I believe it was 75% stocks and 25% bonds, and how that performed. If you like that kind of moderate mix, then let me just show you how we can. I was going to say, there's a guy up on top wiping people out. I am choosing the moderate in this case, and it explains a little bit about what kind of might these mutual funds be investing in. Talks about the portfolio risk, the time frame, the income potential versus something like conservative, where we've got lower portfolio risk, shorter time frame, with income potential being medium.
Nah, that might do it with the white, with the all white.
I'll go ahead and say see details. And I'm interested. Someone asked me what would be a good dollar amount for me to start. Well, I had said 500.
Can you stutter in other languages? Like, is that a thing?
To do this. So let me say 500. And my investment account, I only have my one demo account that I'm showing here. And I could set up a reoccurring purchase if I wanted. So I'm for a minimum of 25.
Imagine your name being Blue Jeep. Already know you're rusty.
That I've been talking about. And I could have that every week, twice a month, every year. So I can set up a disciplined plan. And then I'm not going to do the reoccurring, so I can explain this. Now check this out. Here's a sample portfolio. You can customize it by selecting. So I can customize this, but here's the one that was selected for me. It would be, my target allocation is 70%, so $350 up to $500, and 34% would go into Parnassus Core Equity, 12% would go into small and mid cap, 24% would go into international, 30% would go into bonds, and it would be this one right here. Now, if I hit place order, boom, that's it. That will take 500 out of the account, and it will put it into this distribution, and look at what I've got. It's done for me at that point in time. And if I choose to liquidate it, then I can go in and liquidate those. So very simple, even though the vehicles behind them are not. And if you wanted to dive a little bit deeper into, well, I don't know enough about this large cap fund, I want to do my research, great, not a problem. Here's where you can pop in and you can take a look at all of the parameters that we talked about. We can look at charts. You could dive as deep as you want, including if you wanted, you could go in and read the actual prospectus from the company. And, you know, here's some examples of the stocks that are in it. Again, things that you probably know, the performance, and similar funds if you wanted to compare. Okay, so hopefully that gets you where you need to be with the mutual funds. Let's switch back now. I'm going to head back over to my presentation. And now let's get into the exchange-traded funds. All right, the basic characteristics of an ETF, I'll do the same thing I did with the mutual funds. One is not better than the other. They are different. Now, my path was kind of as I'm presenting here. I started with mutual funds, but because I was in the industry, so I was learning more about stock trading and timing and utilizing charts. So my path went from mutual funds to ETFs to individual stocks to bonds, and that most certainly may not be the path that you take. Most of my friends generally focus on mutual funds, ETFs, and stocks, and they don't get into more complex stuff because they don't live and breathe this stuff like I've been doing for half of my life. You could go down that path, and we'll be there to help educate you. So let's talk about the basic characteristics of them. It's a basket of investments, so there's really no difference between a mutual fund and exchange-traded fund. It's a basket that we're buying into. And in an exchange-traded fund, it could have stocks and bonds, but also there are exchange-traded funds that have currencies. You've probably heard how strong the dollar is right now and how weak the yen and the euro and the pound sterling are. Well, if you think that maybe one of those, maybe the euro is going to have a really strong comeback and it's going to rally 10 or 15%, you can buy an exchange-traded fund that invests in euros. And so if your prediction is right and the euro rallies up, then your position will rally up too. But it can also have things like commodities. It can have things like gold or oil. It can actually have crude oil in it, but it's actually futures of crude oil. But you can do more things. So if someone says, is there an exchange-traded fund that does? My answer is generally yes, because there's thousands of them, just like with mutual funds. Is there a mutual fund that does? Yes, more than likely. We just need to find it, and that's why we have the mutual fund and ETF screener to find it. Same thing with the funds being pooled. Now, there's a portfolio manager, but that portfolio manager is just managing the money going in and out. There is not a person making decisions. So I want to be really clear on that. The mutual fund, there are people that are getting paid to analyze and make decisions about, do we put more in now? Do we take some out? Do we move it from A to B? The exchange-traded fund is a fixed basket. If that fixed basket has 20% of XYZ shares today, well, it's still going to have 20% of XYZ shares tomorrow. There's nobody going in and out. You are the only one making the decisions to either buy the ETF or sell the ETF. So it's like a stock, except that you are managing this basket. So the ETF shares trade on the market like a stock. So you'll buy 100 shares, you'll sell 100 shares. You'll buy one share, you'll sell one share. Unlike a mutual fund where you're buying in dollars and you're selling in shares. Most exchange-traded funds are based on an index with many variations on theme. So if someone were to say, well, I want to invest in this NASDAQ 100 index that's been doing well, but how do I invest in the NASDAQ 100 index considering there's 100 companies in that NASDAQ 100 index? Well, you could buy all the individual companies, but that's very complex, very time-consuming. Well, I guess you could buy a mutual fund, but why would you buy a mutual fund that's being managed if you just want the index? Well, there's an ETF out there. Here's just one example, QQQ, which invests your money, pulls it together, and buys all 100 companies in the NASDAQ 100 index in the same proportions as the index itself. So that's a trade like a stock. It's quoted like a stock. It can be charted like a stock. So let's talk about the pros and cons between other exchange-traded funds, not really comparing it to mutual funds. Just say that it's similar but different. Well, it's diversified, so that single investment in a basket of stocks, bonds, or both. So if you were to take, let's say, whatever, buy one share of QQQ, again, I'm just using that as an example. If someone says, well, how many stocks is that in? Well, because the QQQ is based on the NASDAQ 100 index, it's got 100 stocks in it. Well, can you name me some? Sure. Apple, Tesla, right? I mean, it's Intel. It's whatever that index is. If you were to buy one share of the S&P, of one of the S&P 500 exchange-traded funds, for example, SPY, well, that one share is actually spread out amongst 500 companies. Well, what are the 500 companies? Well, they're the 500 companies that make up that index. So one share can get you diversification. You can even buy an ETF that has 5,000 different companies into it. So whatever that index does, you're going to do as well. So because you are holding a larger number of stocks in an exchange-traded fund, you are reducing single stock risk. But recognize something like QQQ is going to have whatever the largest holding of the NASDAQ 100 index is, which I believe is probably still Apple. So you have the most exposure to Apple, but that's because the index has the most exposure to Apple, not because the fund manager decided to expose to Apple. Low risk fees. So again, if we're talking about trying to seek diversification, you've got someone that could manage your money, a bespoke fund manager, I should say, a bespoke advisor. That's going to be higher, but they're customizing it for you. Mutual funds that you select are going to have lower fees. And then when you're buying into exchange-traded funds, they really have the lowest fees because they're generally not being managed. Now, some are. There are a growing number of exchange-traded funds that kind of blur the lines in that there are people managing the assets, but at this point in time, they're kind of few and far between. My next point, they're taxable. ETFs are designed to trade like a stock and can be bought or sold in real time, making them both a trading and investment vehicle. My college-age son is trading in and out of exchange-traded funds, sometimes on a daily basis, so he's using them as a trading vehicle. If he thinks that the market is going to have an up day, he may go and buy shares of an index ETF, and then if he's wrong, he may quickly sell it because he's losing money. But if he's making money, he may stay in or he may capture his profits, but he can trade in and out of those. And another thing about some of the exchange-traded funds, and you'll see them if they have a moon when I switch over to eTrade.com, they can be traded 24 hours. So at 9 o'clock at night here in California, if I decide I want to get into some of the ETFs, not all of them, still few and far between, I can actually get into an exchange-traded fund at 9 p.m. So some of them do have round-the-clock trading, if you will. So let's talk about some of the downsides. Well, ETFs, not all of them have low fees. Some of these specialty funds have fees that are getting up to 1%. But most of them are very low, like a 0.2%. One of them out there that's an index fund is 0.09. That's what, 90 cents on every $1,000? So fees are important, but ETFs tend to have lower fees than mutual funds. Limited diversification. Some ETFs are heavily concentrated in a specific sector or may hold a small number of stocks. Let's say you found an ETF that was into electric cars. And so you bought the ETF thinking that you were going to be heavily diversified, and then you looked at the holdings and you found that I don't know, 66% of it was one company like Tesla, and then it was the smaller companies that are just doing EVs like Rivian. Well, have you really gotten diversified when 66% is just in one stock? Well, you're diversified, but not very well, simply because that ETF, there's just not enough players. So it's important to go and take a look at what the holdings are. Now, another thing, you are really just along for the ride. Since most ETFs track that fixed index, that investment will fluctuate with the underlying asset. So you can't say, as the market's going down and you're in an S&P 500 ETF, man, we're down 15%. Why don't these managers go to cash, go to cash, go to cash? Well, no, you're on for the ride. Whatever the index is doing, you're going to go with it. Whereas if it's a mutual fund, generally mutual funds will not go to cash, but they may move away from something that is it has more downside, and they may move to something that they feel is going to be a safer place for you to go. So they're actively managing the funds. Now, some of these mutual funds, I mean, we're talking billions of dollars. So you can't just go in and out of that billions of dollars. You have to be very strategic in how you're going to move. So you've been at an organization for about 5 years now, man. Time flies, don't it? Not always suitable for new or
I like them.
Simple to get into. Doesn't necessarily mean what is going on behind the scenes is something that's really comfortable. So I do think it's important that you understand a little bit about the exchange traded funds. Now let me switch over again to eTrade.com and let's just take a quick look at some of the ETF tools that we have, and I will pick up where I left off. I left off on the pre-built mutual fund. Now I'm going back up. Let me zoom for you. I'm going back up to markets and ideas. And I'm going to ETF is really similar. It's kind of the same layout. We have a general overview. We've got the all-star list. Zoom in again. We have an exchange-traded fund screener. And then let me quickly focus in on this. Do you remember I had just mentioned that little moon right there? And I had mentioned QQQ? Because what I did on the screener is I've clicked the extended hours overnight trading. And I can turn that off as well. If I just want to look at all-stars, and maybe I want to drop down here, and again, I'll go with my theme. I was going to say, let's go with Asia, but I'm going to change my theme to solar. Let's see, are there any solar funds that are on the All-Star list? No, there's not. Let me turn that off. Now I'm out of the All-Star. Well, it looks like there are 2 exchange-traded funds that are that have the name solar in them, and I can overlay my my cursor, and it's going to pop up the window. And here's another one called TAN. Oh, that's a cute name. Well, let's just click on that so I can quickly get a look, a snapshot as to what this thing is. Snapshot, charts and quotes. Well, I can see it's having a pretty good day today. It's at up 4.77%. Wow, that's a pretty big move. What is my expense ratio? Well, remember I said some of them approach 1%. Some are as low as 0.09. This one's 0.66. So it's not quite as expensive as mutual funds, but it's also not cheap like an index one, right? Let's drop down here and see what kind of holdings this thing has. Well, if we take a look, 55% are in these 10 companies. Enphase Energy, First Solar, Solar Edge, numbered, that's interesting, these are Chinese, Sunrun, so on and so forth. So I can get an idea, and as we get talking about stocks, you may say, you know, I'm just going to focus in on stocks instead of ETFs. But others of you may say, I just like the idea of getting diversified. Do you remember I just shown you the QQQ? Just for fun, let's pull up QQQ, and let's look at the same thing here.
Guys got
Expense
this.
ratio, 0.20. Well, what are some of the core holdings? Apple, Microsoft, Amazon, Tesla, Google. So if you want to get into these companies and you're interested, if you've got $280, well, we can get you 1 share of that. Not a problem. Let me go back to markets and ideas, back into ETFs. And so there's a screener out there. I showed you that, but let's look at the pre-built ETF portfolio, and you'll see it's almost exactly like what I was showing you before when it came to mutual funds. So we've got aggressive, 90% stocks, 10% cash, all the way down to conservative, 30% stocks, 60% bonds, 10% cash. And again, this will explain simple, affordable, and flexible. Let's get started, and let's go with the same moderate setup that we were talking about before on mutual funds. What's included? Apple, Microsoft. Okay. Portfolio risk medium, investing time frame 5+. But again, these are liquid. You can sell them if you want any time. Income potential lower. Well, let's look at the details of it. And here's the mix that the pre-built screeners were talking about. And the mix is 70% stocks, wisdom tree, symbol. We've got a small cap, 12%, international, 24%. And if I'm curious, hey, what is in this international developed and emerging market fund, I can click on the symbol, and it's going to take me back over to the snapshot. And from there, I can look at things like the net expense ratio, 0.07. Yeah, that's very low. And dropping down, I can look at what's in this thing. Things like Taiwan Semi and Nestle. And so it's showing me, and these are all going to be overseas, 9.18% assets in the top holdings, meaning that this thing has a lot of diversification. Remember I said that we want to be careful of that concentration in just some of the major companies. These are very small percentages, so really spread out very, very broadly. Now, if I just wanted to buy this, remember we talked about how we buy and sell mutual funds versus ETFs. If I just want to buy a share of this, action, buy. How many shares? One. Select and I can go ahead and say, preview my
Did I get the right person?
and buy my one share, and I can place the order and get into it. In fact, I know I'm right at my time. I may as well just go ahead and get in. Again, it's not a recommendation. I just want to show you how simple it is. And we'll get that order in. And let me go ahead and take a look at the order. And we can see that it has executed at 53.43. And then I can pop over to my portfolio. And I'm invested. It is as simple as this. So I have basically two positions. One is a stock, and one is an exchange-traded fund. And I could sell this, but there is, and I know this question popped up earlier, there is something about selling too often the exact same day. But tomorrow, because this is my demo account, I'll come in and I'll probably just sell this and make a penny, lose a penny, whatever. I'll just go ahead and close it out. But I wanted to show you just how easy it is to go ahead and execute that order and get started. Dave, I'm 1 minute over, so let me quickly go to the final comparison here between mutual funds and ETFs. And again, you can download these, but take a look. We'll start with the left. You can buy and sell directly with the fund company with a mutual fund. Whereas with an exchange-traded fund, you are buying and selling on an exchange. So it transacts more like a stock. Second bullet point for mutual funds, it's priced at the net asset value after the market closes. So you're selling a little bit in the dark and you're buying a little bit in the dark. Whereas with an exchange-traded fund, you saw me do it. Boom, I'm in. Boom, I'm out. I used a market order. You could use a limit order. You could use a stop order. You could use a trailing stop. You can use some of the more advanced order types that generally people associate with stocks. The third bullet point for mutual funds, they're actively managed for long-term returns. There's people making decisions behind the scenes. Whereas with ETFs, they're basically, like I said, you're along for the ride. If the stocks within that ETF do well, then you did well. If they do bad, you do bad. It's not, wow, my managers really did a bad job of managing it. You are the manager. Many traditional mutual funds are index funds, so you can find mutual funds that are index funds, but you may find the equivalent with exchange-traded funds, and you might want to compare those to think about the fees, keeping your fees low. There's a very wide range of index ETFs available. There's inverse ETFs. There's leveraged ETFs, things that aren't really appropriate now, but ETFs have been expanding for the different appetites of investors and traders alike. And then finally, mutual funds are really for long-term investing. They're not short-term trading. Silly question I get is, can I day trade mutual funds? Why would you? I see zero advantage there. But with an ETF, they appeal to both long-term traders and short-term traders and everything in between because of what they do. So with that, my wrap, and we'll see if there's any questions out there that should be answered. Mutual funds and ETFs are the foundation for a long-term investment portfolio. They offer convenient, lower cost diversification, as well as the potential for strategic concentrated investments. So if you want to start getting a theme around your portfolio, maybe your theme is going to be something like software and pharmaceuticals. Great, you can skew your portfolio to something like that. Maybe you want to skew your portfolio to something like international. You can do all of that by customizing the mutual funds and ETFs where you put more money or you dollar cost average into those based on risk appetite, age, so on and so forth. Dave, Rick, tell me where we're at, and if I need to go to wrap, then we'll do it.
Well, Sean, we had a very lively Q&A session going. I can promise you that. Tons of folks out there. But interestingly, I think your last slide there addressed many of the questions, and we were keeping up with them too. So given the time that we've got coming up at 2 o'clock Eastern time, I think we should let our audience get a chance to stretch their legs and come back and get registered in time for our next session. Why don't you close it out?
Awesome, great. So upper right-hand corner, you can click that. That will launch you onto the very next session. So we'll see you there in a few minutes. But also, give us 2 or 3 minutes of your time, please. Type some notes, even if it's hey Sean, this could be better. Tell me how, or this was really useful, or tell us what you need over the horizon as you continue down this path. Thanks, Steve. Thanks, Dave. Thanks, Rick, for being in the background. For everybody for the Q&A, and I'll be in Q&A for Rick's session. So take care. We'll see you in just a few minutes. Bye bye.
What's up, War? I'm just setting up.
What's up, man?
Baby.
Say PS3 all the way, huh?
Yeah, baby.
Nah, man. Never had a PS3. I had a PS2 and PS4.
Oh, okay, I see. No worries.
So where we going? Monster?
Yeah, we doing ranking at 4 on my live stream.
Oh, you lost. So you say today I'm gonna be famous?
Well, very good afternoon, folks. It is 2 o'clock Eastern, Wednesday, October 26th. And this is session number 4 of 6 sessions that make up, in total, our Intro to Investing workshop that we're offering today. Hopefully, you've had an opportunity to join us on one or more of the previous sessions. The good news is that every session is recorded, and you can visit us at etrade.com/workshop, and you'll be able to find information there. Also, just a couple of quick things. We got a lot to cover here today, but there are always new folks at each session, so a couple of quick things. First of all, there is a little Q&A button. You can click on that, and you can send in questions or feedback. We've got a couple folks watching those coming in, and we'll respond as best as possible. On these sessions, we also have a resource button. And for those sessions that have a presentation, you can download the PDF right here. You can pick that up, take it with you. So good stuff Also, as we get started today, we'll let you know that everything we talk about is for educational purposes only, and nothing should be construed as a buy or sell recommendation. So this one is a little more hands-on than perhaps what we've done so far today. This is an opportunity to take a look at two of the platforms that we offer. We're going to look at E-Trade Mobile, and we're going to look at eTrade.com as the website. Now, these are not the only platforms that we have available to you for research, for trading, for all the things that you want to do transactionally, statements, and so forth. But I think you're going to get a good overview, and really the goal here is to show you at a top level what some of the capabilities are for the mobile platform and eTrade.com, and know just that you can use them both together as it suits you. So with that,
I'd like to get my driver's license and
the at the bottom of the app. So when you go grab the app, you open it up, you'll see that at the bottom introduces to mobile, and then Dave will come in and walk you through. So as you can see, first log in. I heard, Daddy. You're going to be at what we call the dashboard or the account page, and you're going to see that allows you and what's happening with the market. So let's move over to
Okay, let's begin at the login page. You have your user ID, your password. You'll notice the icon next to your password. The icon that's the password incorrectly. This is going to take us there to the main dashboard page. You'll see across the top, you've got some good summary information, net value of the account, daily.
Oh my camera.
Right below that, you see it's the
teammates, I got mine.
Anything news. Now, what if you want to change the order of something? Customize your view, and you can scroll the order, toggle back and forth. A lot of ways you can customize that to your own liking. Let's go ahead and move up to account, and if I click on account right there at the top, you'll see now I'm giving a choice of portfolio, balances, orders, and so forth. In portfolio, I have detailed information about what's going on in my portfolio. So I can scroll across here, I can see what's happened since I bought it, the price paid, the market value, just information that's helpful in managing individual positions. More information is what I would go to see and here I stock value, for example, bonds or mutual funds or options. Now, what is my margin balance? What is my what withdrawals have I done? It's just information that's helpful to see down at the detail level. Now, this next one is orders. This is very important because if I want to see if I've got a pending order, is this something that's in the queue that hasn't been executed, or I want to verify that an order has been filled, this is the page where I can go to look at that. I can search for particular dates. I can look to see what buys, sells, cancellations, those sorts of things. Next, I'm going to move to transactions. And under transactions, this is where I get detail on individual buy-sell transactions, dividends paid, anything that shows up as a transactional activity to my account.
Open up your eyes, nigga. There's a war going on outside.
So I want statements. So I'm looking at a particular date range. This is where I can find that information. So you see when I go into the account detail by clicking on that right arrow at my account level, I get a lot of information at the detail that helps me understand where I am, what changes to, what I need to cancel, what I need to do some research on. All of that can be found right there from your dashboard page.
Next up, we've got the watch list. That's going to be number 2 on the global menu. This is a fairly simple screen, but it's important because a lot of people like to use watch lists to keep track on what may be coming up, things with earnings and so forth.
Next up, you'll see across the bottom there is a menu item called Watch Lists. Let's go ahead and click on Watch Lists. And this is just a way for you to keep track of stocks that maybe you just want to see what's going to happen with them. Maybe you think you might want to trade them, but not quite yet. So hence the name, you want to keep an eye on them. Now, you can add stocks to watch lists by add to watch list. If I could type in Walmart, it'll tell me WMT. I click on that. And then it says WMT has been added to your watch list. Very easy to add something right there. I can scroll across and see specific information about that watch list. If I want detail, so example, I want detail.
Yo, there's somebody on that roof.
And for those sessions that have a presentation, you can download the PDF right here. You can pick that up, take it with you. So, good stuff. Know that everything we talk about is for educational purposes only, and nothing should be construed as a buy or sell recommendation. So, this is a little more hands-on than perhaps we've done so far today. This is
yeah, I see him.
An opportunity to take a look at the platform that we offer. And we're going to look at eTrade.com as the website. Now, these are not the only platforms that we have available to you for research, for trading, for all the things that you want to do transactions.
It's right here.
Really the goal here
He's running. I got him.
What some of the capabilities are for the mobile
Hello.
platform and eTrade.com, and know that you can use them both together as it suits you. So with that, I'm going to jump into the mobile platform, and what we're going to do is we're going to basically walk through the menu that's at the bottom of the app. So when you go grab the app, you open it up menu with 5 points. We're just going to take a quick tour through those 5 points to introduce us to mobile, and then Dave will come in and walk us through some highlights.
He didn't even know.
There's accounts, watch list, trade, and menu. Now, when you first log in, when you first open it up, you're going to be at what we call the dashboard, the accounts page. And you're going to see a lot of high-level information related to kind of the go-to page that allows you to see what's happening with your account and what's happening with the market. So let's move over to the actual app itself. Let's take a look at that and see what we have.
Okay, let's begin with the login page. You have your user ID, your password. You'll notice the icon next to the password, the icon. That's so you can see if you've typed your password incorrectly. We'll go ahead and hit login. You'll see across the top, you've got some good summary information, net value of the account.
All the way. You say I'm gonna be famous today?
Right below that, you see a summary of the Dow, the Nasdaq, the S&P 500, so you can get a quick capture on what's going on with the markets. As we scroll down, we see our additional account information.
Hey everybody, I am famous today.
Portfolio information, portfolio movers, portfolio news. What's
Because I'm gonna be famous. I'm gonna be famous.
Want to change that, or maybe there's something.
Yes, I'm famous. Hi, my name is War Dog Bubba. I'm a real shooter. I don't take no shit.
Scroll the order around, toggle back and forth.
Alright, I'm gonna do that shit right now.
Customize that to your own liking. But let's go ahead and move up to the account. And if I click on the account, right, you'll see now I'm given the choice of portfolio, balances, orders, and so forth. In portfolio, I have detailed information about what's going on in my portfolio. So I can scroll across here. I can see what's happened.
What you say the channel name again now?
Market value. Just information that's helpful in managing individual positions.
All the way.
More information.
All the way. What's the name of the channel?
To see my year-to-date.
Yo, you can hear me, bro?
Performance and, for example, whether I'm participating in the dividend investment. Let's click on the balances now. And here I have a detailed breakdown of things such as my long stock value, for example, or if I have bonds or mutual funds or options. What is my margin balance? What is my what withdrawals have I done? It's just information that's helpful to see down at the detail level. This next one is orders. This is very important because if I want to see if I've got a pending order,
what's the name of the channel?
That hasn't been executed, or I want to verify that an order
what's the name of the channel, man?
This is the page that I can go to look at that. I can search for particular dates.
Oh, the Money Buddha.
Buys, sells, cancellations, those sorts of things. Next, I'm going to move to transactions, and under transactions, this is where I get detail on individual buy-sell transactions, dividends paid, anything that shows up as a transactional activity to my account. Next up, I've got documents. Do I want tax documents? Do I want statements? Do I want to look at a particular date range? This is where I can find that information. So you see when I go into the account detail by clicking on that right arrow at my account level, I get a lot of information at the detail that helps me understand where I am, what I may make changes to, what I need to cancel, what I need to do some research on. All of that can be found right there from
next up, we've got the watch list. That's going to be number 2 on the global menu. This is a fairly simple screen, but an important screen because a lot of people like to use watch
You right here, come out here, show me your hands.
On what may
come
be
out with
coming
your hands
up,
up,
things with earnings and so forth.
He's on top of the building.
Next up, you'll see across the bottom there is a menu item called Watch List. Let's go ahead and click on Watch List. This is a stocks that maybe you just want to see what's going to happen with them. Maybe now you can add stocks to watch list by add to watch list. Click on that. Very easy to add something right there. I can scroll across and see specific information about that watch list. If I want detail on, say example, I want detail on Walmart, I can click on the symbol and it takes me to the detail page for the stock in that watch list. Customize the view. I can click down below. Now it shows me what columns I can look at and what orders. So for example, let's say the one all the way at the bottom, let's say I want that closer to the top. I can just click on those 3 drag it up, and drop it to the top. And switch back and forth between various watch lists if I have more than one. I can create a new watch list just by hitting that create button there. So you see you've got a lot of flexibility in how to add, change the format. Watch lists can be very helpful for you to keep track of stocks that you think might be going up.
Yo, I'm in trouble. I'm in trouble. I'm in trouble. Yo, hold on. Yeah, they know I'm here. Somebody already sniping at me. Oh boy.
And whether you're trading stocks, whatever it might be.
It's the #1 playing game.
The next menu item across the bottom in the middle is called Trade. Let's go ahead and click on it. Well, you see that let's play again. My account that I'm looking at the moment, the value of the account, my purchasing power, and it's important to notice that right below that, it tells me my options approval level. So if you have been approved to trade options at a particular level, right there is where you can see easily enough how to find that. I can trade stocks, options, mutual funds. Let's go ahead and look at setting up an options trade, for example. So let's pick Walmart just as an example, and then when I select the symbol, in this case Walmart, I'm going to get my option chain. You'll see it's calls on the left, puts on the right, strikes down the middle, and I can scroll up or down, or I can go to a particular strike if I know which one I'm interested in. I've got my bid and my ask. Across the top we have the expiration. I can grab the expirations all in one pull-down menu. See that? Hit on that pull-down menu, and now I've got the. Let's say I want to go to the November 25th, 2022. I click on that, and it takes me right to that expiration. You'll notice that on the center of the after money right back in the middle of the page, on the left side, you'll see the shade. It's a light purple shade there on the calls. That shows you the in-the-money calls, and then if we go over to the right side, the puts are the purple shaded on the right side. So you can easily see the difference between in and out. Let's say I want to trade this. Well, one way I could do it is just simply click on a particular expiration and strike. So let's say I want to buy the 134 calls for the month that I'm looking at. Well, I can click on the ask of the 134.
I would say maybe porn's up there too.
And here I can tell it, do I want to buy, sell, am I opening or closing? Let's say buy to open. And now it will set up the order ticket. It says buy to open, the particular option that I chose. And then I can go further to select the price type and the term. I click there, and I can choose market order, I can choose limit order, I can use a stop order if I want on the option. The term, I can make it good for the day, I can make it, well, of course, market is only going to be good for the day, but let's say I went and change it to a limit. And I put in a limit price of, I don't know, let's say $4. Now I'm going to have a term that's different than good for the day, because limit could have something other than that. You see, I could go as far out as 60 days and other terms that I might be interested in. So this is all of the order information that you would have on the ticket. And then when you're done, you would go ahead and click preview down there if you want to take a look to just verify that everything is accurate before you send the order. I'm going to go ahead and cancel this right now. Do you want to cancel the order?
Bro, you wrong, bro. You wrong. Real estate is not the #1 business in the world, bro.
And there is my trade ticket. Now,
You
obviously,
wrong.
if I were trading a stock,
It's slavery,
it would
okay?
be a little bit different, right?
That's the #1
I would
business
not
in
have
the world.
contracts. It would ask me the number of shares and all of the information that I would be interested in for a stock trade. So that is the Trade tab on the mobile platform.
So that was a little bit advanced in terms of options, but it gets even simpler with just buying and selling stocks. But it'll hopefully give you a little bit of a flavor of what you can grow into eventually. So if you're just simply looking to buy a few shares, very easy, very straightforward. Next up, we have markets. Now, markets is going to be more global. Not specific to an individual stock, but just what's going on across the board. Let's take a look and see what that looks like for us.
Next on the menu list down at the bottom, number 4 there, it says Markets. Let's go ahead and click on Markets. And you start off with an overview, and this, like on the dashboard, it shows you the Dow, NASDAQ, S&P 500, Bloomberg TV, what's moving, top earnings. If you're following earnings announcements, especially during earnings seasons, this is important. Top earnings news here. Futures, if you happen to be pre or post market, you follow this as well. And then the news, and then like with the other pages, you can customize your view. So let's say that I wanted news farther up to the top. I would grab that on the 3 lines, drag it farther up to the top, release it, apply it. Now my news is going to be right there below the market overview. You see on the top, we have events. This is important category earnings and events. If I leave it at earnings, as you see on the top, you'll see that I can see what earnings are coming up.
You guys understand?
Everybody shut up!
Earnings listed here in alphabetical order. Events, what does that mean? Well, jobless claims.
Okay, you want me to
business index. These are more economic events that are not unique to individual companies. So both earnings and events on the calendar are important to keep up with. Then the last is the screener. This is very useful too. Much like the screeners that you have on Power E-Trade or on the E-Trade website, here you can screen for stocks, mutual funds, ETFs, based on a number of different parameters. Let's say I want to go to the technicals down here at the bottom. I want to say find me a stock that's within 10% of its 52 high. Well, right there is how I would do that. And then I leave that to apply. We're going to open it up actually a little bit more. Let's say 61%, so we get a few more results here. I could clear everything. I've obviously got some earlier screens on here. Well, I said those are stopped. Some volume, just hit the clear button. If I want to clear all of them, there I go. I can clear all of these. And now you see that what I'm looking at are going to be a clean slate. So now I can start with, say, show me all stocks that are more than, say, $10. There you go. I'm going to hit done. And now I've got, as you can see at the bottom there, 3,854. Maybe I want to find something that's compared to the 0 to 20% greater over the last 4 weeks. There we go. Now when I go back here, I can continue on, add my parameters. You notice it says we can only display up to 100 search results. Right now I've got 2,260, so I need to narrow it down a little bit more. I certainly don't have a reason to look at over 2,000 results. That's just not kind of defeats the purpose of the screener. But nevertheless, you see here, a lot of good information in the markets menu.
All right, the last one we have is the menu. This is kind of the sitemap. So let's take a look at what we can get out of the menu.
Now, last but not least, across the bottom menu bar, we have something called menu, which is the general menu. We click on that. You'll see that there is just a number of different things here that you may be interested in. In a sense, it's really a sitemap. At the top, alerts. If you have alerts created or you want to create alerts, you see you could set an alert or manage them. So if, for example, you wanted to be alerted if a stock is reaching a certain price, right here's where you would do that under alerts. Banking, transactional things, check deposits, transfers. My profile, if you want to make changes to your profile. We've already seen in one spot where you can find your tax documents, but you see right here, I can go in and find tax documents for a particular year, for a particular account. This one I like, customer service. This is how you get in touch with us, and we give you a number of ways. You could leave feedback, you can send documents to us, or you can call us or live chat. So a great, easy way to get in touch with the representative as you need to. Below that, the other one that I really want to point out is the knowledge base. This is where you get additional education. Events such as the one that you're watching right now for the mobile. You can learn about investing basics. You can learn about options. What you would do here is go to All Insights, and you're going to find it categorized. And from here, you can look at things such as tax planning, retirement, market news. But if you want to find more of these webinars, scroll down to events. And right here under events is where you can sign up for all of our upcoming sessions, or you can also watch the recorded sessions on demand. So a lot of choices here from the main menu. And hopefully you'll take advantage of that.
Yeah, he's moving.
As you have an opportunity.
Come out with your hands up.
All right. Well, folks,
you're surrounded.
I'm surrounded. You sure?
Come out with your hands up. You're surrounded.
See if that's something that's good.
You sure?
And now,
you sure?
Show me your fucking hands.
For a walkthrough of the E-Trade.
Nah, you show me your hands, boy. You show me your hands. What I say?
Up the steps, Green. Where's my squad?
Remind everybody that we're doing this sort of a whole afternoon of basic stuff. We're building up.
I thought we were stacked up on the door.
Platform focused on the things we've talked about so far.
What are we doing here?
We're going to get a little more.
Then the part that's annoying, then they want to come in after he dies. Like, don't go in now.
Let me take over screen sharing here.
That's them damn brushes right there.
As accomplished this, we'll be looking at where I'm bringing up my second monitor, and you will be looking at what we call the complete view page, the page you most likely land on when you first log in.
What? No, bro. Yo.
And it doesn't appear to me that I am. Are you guys seeing me? All right, cool. So, all right. So, as I mentioned, this is.
It's funny because I can hear you, but I don't know how you can't hear me.
There's a little drop-down choice there when you log in if you want to do that. But,
show me your hands. Show me your hands.
Land on. So what I want to do is give a lay of the land, a general overview of the primary navigations that you'll want to be using, and then we'll go through a few tasks.
And
investment idea. I'll go looking for an exchange-traded fund, since that's something we had a lot of discussion about last hour. We'll look at how we view our portfolio and our holdings. We'll talk a little bit about funding your account, and with time permitting, maybe take a look at some other research.
No, I can't do this.
So first, we'll sort of go into an overall look at this page.
48.
You can see here the account holders.
Nah, I can't do this because you talking too much, bro. You talking, I can't even hear you. You can't even hear me. Right? See?
This is your greeting name. I'm an investor. This is the name of our investor. And by the way, if you want to change that, if you want to have fun with it, if you want to call it whatever you want, you can see here I click the little gear, and now here's where I can change my greeting name, and then I can name any accounts I have underneath here in whatever suitable way I choose. So in the main part, what we'll see is a summary of my account. If I scroll down further, you can see that there's another account down here. And on the right, you'll see I've got alerts of events that have recently occurred in this account. I have some holdings in here, but we're going to look at the portfolio in a little more detail coming up. But I want to bring back to the top level menu. So you can see here the complete view page, which is this right here, is within the accounts choice. So in the accounts menu, there are all these other very important repositories of information about your account. I think they're all fairly obvious what they are. I mean, portfolios, okay, that's the positions, the investments that you hold. Watch lists, those are lists of stocks that you might want to pay attention to and follow over some period of time. Orders, here's where you're going to see the history of any orders you've placed for stocks. Buys, sells, etc. Again, you can see what each of these mean. Transactions, by the way, would differ from orders in that it would also include financial movements, so deposits, withdrawals, dividends, etc. Documents for your tax documents, your brokerage statements, all out here. So that's the accounts level. The next menu is called trading, and this is where you go to make a transaction. And if you know you want to make a purchase of a stock or an ETF, you can just come in here, go to this, and you can begin the process of making that purchase, making that investment. In Rick's session a moment ago, he used an example with some options. If you're inclined to trade options, you can see that there are here. If you want to purchase mutual funds here, recognize that mutual funds are in a separate area. ETFs trade like stocks do, and we'll make a purchase of an ETF coming up. And then some of the stuff down here is a little more advanced, and some is more suitable for our discussion here. Conditionals are a type of order type that more active, sophisticated traders use. Not something that you need to be overly focused on if you're just starting off investing. Now, automatic investing is something I spoke about in my session earlier. The idea of creating a disciplined investment approach, making regular contributions and having that automatically invest in some sort of a diversified portfolio is, a profoundly useful way to get started on your investment life. And obviously, a lot more stuff down here, and some of this stuff is more suitable for advanced or more active traders. And then the next menu, Markets and Ideas, this is where you will go to research or learn about or find out about or look for ideas. The trading menu is where you're going to transact. Markets and Ideas is where you're going to explore and try to learn about investing, find out about stocks. If somebody told you about a stock, you can learn about it by coming in here. All right, so, and once we're here, you can see there are various groupings. One suggestion I will have, if you are a market follower, is each morning prior to the opening, come in here and click the U.S. Markets tab and simply read the lead stories that are here, especially prior to the market opening. It'll give you a rundown of what's expected. If the market's moving up, they're going to be giving you what they believe are the catalyst reasons for it. If it's falling, what are the catalyst reasons for it? So a simple way each day to sort of stay abreast of the markets. And then the last column, what we offer, is certainly something, especially if you are newer to E-Trade and there are things in here, additional services that we have. I'm sitting here and there be an access about making transactions and thinking of investing. And paid lending. If you're familiar with that, where if you have paid securities, you can borrow money on it in a relationship, cash management, insurance, etc. Find out about our pricing.
Oh, I got a flashlight now. Whoa.
So those are the main menus, and then in each one, when you get to the main page there, that sub-menu will be along the ribbon here. Okay, so that's the basic navigation of the website. Now I want to get a little task for you. Walk through the how do I do this?
That's the person laughing, come back with the message and hitting the melody, making them think. Nivel de cortó mi licencia de.
So up here in the top ribbon, that is all things transfer. All things transfers.
Oh, Krabs, I forgot to tell you a story. So I was playing solo
Resurgence,
right?
Your bank to E-Trade,
and
E-Trade to your bank, and so on. So I'm just going to click the main choice there. And it's a simple page. Basically, if you want to move money from your bank to E-Trade, There are no internal accounts associated with it. There's money in this account, but it is the company's money, not mine personally. But in my personal account, I have several bank accounts in there, and I also have several brokerage accounts in there. My kids' accounts, wife, IRA, traditional brokerage, trading account, etc. So, the first step is to set up your bank account. Now, it takes a day or two, probably a couple days, maybe 3, but you give your bank information, our back office talks to their back office, confirms identity and conditions, and then agrees that there will be flow of funds back and forth. Once that's established, your account will appear here, and then you can select where it's transferring to. So, it's going to your brokerage account. Now, this uses what's called the ACH system. You don't need to know that, but what you probably would know is that things like Venmo and PayPal use the same system. It's the same thing why it takes a couple days from a Venmo deposit to hit your bank. So moving money is easy, but just remember on that initial funding, a couple days to set up the account, and then a couple days for the money to move. So give yourself a week to make sure on a Monday you begin the process so it's there by the Friday, and then you can start thinking about
let these Jones go on your feet.
investments. And by the way, while you're here, we'll just click the Other Services tab just to remind you of the range of sort of banking and money movement services you can have with your brokerage account. All right, so that's funding the account, first things first. So let's imagine Ima would like to invest in an exchange-traded fund. She heard about them. She learned about them recently. She goes, oh, they're very much like mutual funds, but I can buy it just the same way I would buy a stock. So how are we going to go about finding one, assuming she doesn't already know? Well,
you in that building, come out with your hands up in the building.
And then down to ETFs.
Come out with your hands up.
There's several
You're now surrounded.
ways to sort of sift through the, I don't know, thousands of ETFs.
Yep, that's you. I see you.
One shortcut.
Come out with your hands up.
Really, to me, makes a lot of sense for
You're surrounded.
someone new or starting off. Is
Oh, I
to
got
simply
him.
take a
Strike
look
team,
at
striking.
our All-Star
Viper strike, inbound, strike them.
ETF list. Now, the All-Star list.
There we go. Target
not-
down, strike them.
These are not
Annihilating
selected for
all
their
targets. Show me your
performance.
hands. Where's my squad, man? Can I buy some people?
For their performance tracks closely to whatever index they are tracking. That's the part of it. In that sense, the performance is not any attempt to predict future performance. These are funds that have high fund qualities, like low expenses, close correlation to whatever index they are tracking. Long-tenured fund managers coming from a large fund complex, not a startup, so it has to have been in business for a long time. It has to have a significant amount of assets invested in it. So that's what makes an all-star. And we have a list for ETFs and for mutual funds. So the next point is to sort of think about plain vanilla. All right, so you'll notice that along the top are the major categories. So domestic large, so there's U.S. large company stocks, U.S. small company stocks, international, and so on. And we also then categorize the U.S. large stocks within that. Sometimes you'll see the term blend, and then you'll see growth, and you'll see value. Now, these are topics that...
Them niggas was ghosted up, bro. Just saw them niggas on the UAV, bro.
Think of it this way.
That shit crazy, bro.
Are those that are expected to be
That's
growing
just bug.
their revenues and
Hey, y'all shut the fuck up.
so that
You
therefore
crackers in here, shut up.
they generally
Shut
are
up, crackers.
fast growing.
Oh my gosh.
Growing their
Fucking
earnings
ran out of
and
ammo.
product.
That was
And
a close
they're
one. I
very
almost
popular. And
lost.
these are what many of the great technology companies, Salesforce, Google, Microsoft, etc. Value stocks are those stocks that are thought of as being sort of unloved compared to their earnings. So the investors are very excited about it. Well, when you look at an entire index like the S&P 500, it has some growth stocks in that, and it has some value stocks in it. So therefore, this is what we call a blend, where it has some growth and some value. So you'll notice right here, the Spider S&P 500. This is the very first ETF. It is the largest and most actively traded, and it is used by many investors as a slice of a diversified portfolio. But there are many other categories, many other ways to consider making an investment in one of these. But something plain vanilla is certainly sort of a way to think about it. Let's buy some SPY. So one of the things I can do right over here is just click the buy button. And that's one of the things about our site. Throughout this site, there's going to be ways for you to place an order on that. And then the other thing is to realize a lot of times our quotes are clickable for orders. So let's buy. What I have here is symbol has been all automatically deposited here, and buy is already deposited. And now I have to decide how much I'm going to buy. Now,
they done came all the way around the map.
Arena right here, I have to buy a whole share amount, so I could buy one share.
Be careful, team.
There are programs such as our automatic investing program where you can purchase fractional shares of exchange traded funds. Here we have to, we're going to buy whole shares. And so if I was to buy 10 shares, it's $382 a share, so that's a $3,800 trade. Let's just put 2 in. So I'm spending $765.30.
What about getting that price that you fucking scammers? Do the price ever? Just trying. I made $900. What else I make on each trade? Added that. Is it more than what they disrespected me for? Them niggas disrespected me. $130. Fucking peon. Come on, big money. Big money, no whammies. We made $23. Plus the other one. Okay, I think I made it. I might have made it. 120. Something down. Something on there. Yeah, see, these ones are down. One of them was down, and that other one was down. Now I went up $200. On top of what it already had, that's $400. And they need to do something after hours. Yeah, see 468 in the green. Now up there with SPY. We got 2 winners now. Come on, y'all. This was to be only green in this company. I'm with you. MMC, that's like them the people in California that's supposed to be a movie company or something. They supposed to be shooting some TV show or something. Yeah, I got 1 million shares of them. Them the 1.6 million. So I said, they need to go bullshit. Let me get paid. Strike, I'm here on the stunt. There you go, in the gazebo. Fire, strike him. Viper strike inbound. Devastate the target. They should have some destructible buildings or something colorless. Think about that aspect. I know, right? I always get killed right there. Be careful. Every time I get on this damn alleyway, it'd be somebody in one of these houses camping. See, this is really what the game really looks like. And then the textures are loaded on top of this. And that's what makes you look like you're actually playing a pretty game. But it's really just fucking whatever, the asset. And then be these little things and trees. That's why it ain't loaded in yet. See, now it loaded in. You see it? Now it's loading. No. It's all the matrix. Nothing exists. One big illusion. Only a few things are actually real. Like that box part is the only thing that's in this map that's really. The rest of this empty shit just put there. Stuff to interact with has to be there. You gotta touch it. Like this door, I gotta touch it. Well, somebody trying to kill me. Shooters on me, on me! My teammate. Oh, they up there. They with us. Get out of there. Get out of that building, Brody. There's two of them, top floor. Come on, I'm shooting right at him. This game is crazy. Crouching, they do all these weird little things. I'm like, none of that shit should be able to do. You should not be able to crouch while being shot. You should not be able to jump while being shot. And that doesn't make any sense, nigga. All those things should get suspended. You can't just do all that shit. That shit is crazy. What's going on with the stream? Hey, what's up, y'all? War Dog Bubba here. What's up, Bubba? What's up, Andrew? Hey, baby. Y'all can get in the game if y'all know my name on there. What is it? PS3 all the way? Where you at, War? Are you online still, War? War Dog? Where the fuck is War Dog at? Oh, you know. Who's still playing? Jester's on. Carter's on. Start shooting out random invites. This is how you do like Grand Theft Auto. Invite all. And it is invite everybody on your list. Oh shit, I done joined somebody. What they doing in here? You playing? I'm in your lobby. Now the question is, how do you leave? I never gonna fucking figure out how to leave to the lobbies. There we go. I'm thinking DMZ. What are we thinking? Are we thinking DMZ? Cause I gotta rob a few people anyway to get my gear back. Alright, let's go DMZ, get my gear up. Money Buddha. Then we'll wrap it and we'll take and do a Wall Street recap or something. I guess we'll log out of this shit too. Enough for the stock market. Enough for you all. Let's see if Kramer. When Kramer comes on, we're gonna call. I'll call it. 2 minutes. Can't fast forward time. I guess they'll tell you though on the thing, won't it? On the Nope, Shark Tank. They was running Shark Tank since before. It didn't even do nothing. China. Whoa. Oh shit, I forgot the market closed early. I was wondering why the market was fucking I was like, why the I'm dumb as shit. I was wondering why the market looked like it wasn't moving after 2 o'clock. I say, why it looked like the market not moving? I kept starting my motherfucking gear. I was like, why my shit not reading the data? Whole time it's fucking the 4th of July market closed early. My dumb ass. We got this team fire. We got a team. Welcome to the DMZ. I love the DMZ. I feel like it's the best game they made this shit. there we go. I need that. I think that's the last one I need. Okay, I got a secret sniper rifle. Okay. Uh-oh, that's the enemy. Oh, let's get that motherfucker. All units on me, on the move. Let's get him. Let's get this guy. I want his gear. I need your gear. Show me your hands. Oh, come on, squad. Where's my team? Water, get in the fucking water. What are you doing? Motherfucking skin of our Jimmy Jed, bro. They didn't keep my whole squad.
Yeah. They're all here. All three of them are in here.
Y'all niggas playing around. I say move. When I say move, I mean move. Now, motherfucker, you got multiple Ricos all on our position, and now what y'all want me to do? You want me to risk my life? You want me to risk my life and my family, and my generation?
It'd do it for you.
As the Moray say, but I gotta go. You niggas ain't shit. Y'all, next time when I tell you on my position and follow my command.
You're playing like a bitch.
Well, you're dead, so it doesn't matter if I'm a bitch when you're dead, faggot. Now die slow, loser. Watch your fucking mouth.
Can't believe this guy's ex-Philly.
Yeah, you mad. You mad, bitch. Loser. Watch your fucking mouth. I left you. Left you all to die, loser.
Good team player.
Shut up, loser.
You're the loser.
Now you have to go reset. Go reset. Loser. Watch your fucking mouth. These faggots, bro. I love it. Call me a bitch when you're dead. Good night. DMZ, bitch. Welcome to the DMZ. I love the DMZ, boy. This shit is the fucking hood. And I got out of here with all my shit. I can't take no losses. I needed all of that to come out of there with me. That's what's so fun about that game mode. All this shit really matters. You can lose all your gear. That's the best part about that shit. That's why he was mad, because he thought I was gonna go over there. I'm not going over there. They waiting for me to go over there, idiot. You see, they almost killed me. I almost died with y'all dumbasses. And then what? Now what? Now all three of us are dead. Why? Why would that make sense? That don't make sense. Why would that make sense? Did I unlock whatever I needed to unlock? This game's so weird, you just never know. Oh, I think I did. Okay, I did unlock what I needed to unlock. There we go. I unlocked my second slot. I got my second note. Yeah, okay, yeah. I got a second slot now. Now what I need. Loser got mad at me. Don't be mad at me, brother. Brother. Don't be mad at me, brother. What do I need to do next? I got some missions to do. I don't feel like this shit. What I need? I'm gonna do one more. We're gonna get 2 fuel rods, y'all. Let's see what excitement comes from getting 2 fuel rods, and I'm gonna bring all my shit out. I'm bringing everything out like a big old squishy. I'm big and squishy. See if anybody wants to rob me. Who wants to come take all my good guns? I'm gonna bring out something tasty. Bring out something tasty for the crowd. What do I want? Yeah, bring out a nice old... Oh, damn, they got new pistols? Why would you come out with another Deagle? You see what I'm saying? This game is stupid. You already have one Deagle, and now you'd come out with another Deagle instead of coming out with like a Beretta or something. Like you're gonna put the same gun in the game twice? Come on, Activision, you money grubbing piece of shit. Don't you make enough money off of people? You can't hire some people to make some guns for the game? You fucking scammers. God damn, bud. I'm gonna say, oh man, we got a new gun for you all. The GS Magnum. Oh yeah? Kinda looks like the fucking 50 cal. Oh, I see. It's the 50 cal, but it's chambered in Magnum round. Remember I watched the video the other day. Is it? Nope. It's still chambered in 50 BMG. It's a fully automatic. Oh, they didn't put the switch. They got the switch on the 50 now. Oh man. They didn't put the switch. They didn't put the damn sear. They got the automatic sear on the goddamn fucking 50 cal. Fully automatic 50. Oh man, they didn't put the sear. They done got the sear on there with the switch. They didn't put the Glock switch on the goddamn 50. Alright, I'll let y'all. I'll let them slap it, even though it's the same fucking game, the same gun. They just fucking, but goddamn, they didn't put the sear. How you unlock it? Get three headshots. Oh, okay, 30 headshots. Oh, we got that. That's what we gonna be doing. We getting 30 headshots. We getting 30 headshots. Let me bring out something juicy. Something juicy for me to lose in the game, in game. Man, that shit looks juicy. Why don't you bring that gun up? Oh, there we go. Oh, so even though you got 2, oh, okay, I see. All right, chat. We're going back in the DMZ again. But now we gotta go to Al Mauser. And now we gotta do some Geiger counter runs. And try not to get murdered in the Al Mauser. Get murdered in the Mazra. See who's gonna rob me. Rob me in the ghetto. They gonna rob me in the ghetto. In the ghetto. In the ghetto. In the ghetto. Talking about in the ghetto. Niggas, don't you want a motherfucker go live in the ghetto? I think those are the lyrics. Don't you want to live in the ghetto? Everybody, we're moving to the ghetto. All my subscribers, sell all your possessions. Get in the chat boat, and we're moving to the ghetto.
Oh shit, let's kill him! Kill him!
Shit, the ghetto. We're all moving to the ghetto, brother. To the ghetto.
Well, let's kill them ghetto asses.
We're all moving to the goddamn ghetto. In the ghetto. Talking about money, any money in the ghetto. Don't you want to live in the ghetto? Got my car stolen in the ghetto. Let's see how much. $7.96. We're almost won. Shouts out to the chat, boys. Thank you all, man, for making this the hottest show on fucking YouTube, man. I fucking appreciate y'all, man. We're moving to the ghetto. We're getting all our shit going to the ghetto. We're packing up.
The green one. That ain't me. I ain't saying nothing about the ghetto.
Packing all our money.
I ain't.
And all our money up
I
to the ghetto.
Oh, I ain't from the ghetto, but I know about the ghetto.
You don't gotta be there. You don't gotta be from the ghetto, cause we're moving there.
I know about the ghetto, but I ain't from the ghetto.
You're coming, baby. It's too late. You're already on board. You're getting kidnapped. You've been
I'm
kidnapped.
ghetto fabulous. I am ghetto. I am ghetto fabulous.
Yeah, there you go. See, ghetto fat. What? Who's shooting you?
I don't even know, but they turned my ass up though.
Lose all my gear. Oh no, someone's trying to kill you all.
Damn. Yeah, somebody trying to kill us.
Multiple bogeys. They're ghetto bandits. There's ghetto bandits everywhere. Watch out. There he is. Oh no, ghetto bandit. There's ghetto banditos. Oh no, where's he coming? Oh my god, where's he shooting from? Die.
I don't even know. I'm looking too.
Everywhere. They're in the grasslands.
There should be a team over here too.
I put my thermal scope on. Thermal optic.
Should be a team close by.
I had to put my thermal optic on while we're in the ghetto. Alright. Where's that damn mission? Now that the mission is a valuable mission that you have to do to complete things, it's like never to be found now on the board. There it is. Like,
Which mission you talking about?
Like that's pretty far away now all the time now. It used
Alright, there go a team right there.
It used to be readily.
Team right there. Man, this sorry ass gun. I stole this gun from somebody. This shit trash. Yeah, this gun ghetto. How you gonna make a sniper with a short range on it? Like what?
Don't you lose all your money in the ghetto. Talking about lost all my money in the ghetto.
Yeah, it's about to get ghetto. Hey, Blue. You slacking, dog.
How the fuck am I slacking? You faggots left me. I'm over here sweeping. Living.
No. We been over here shooting. Yeah, you did. You left us. You wait until we get killed, then you coming. Now that's ghetto.
Y'all better keep y'all head on a swivel. I know that much. Do they count to my kills, or do they count it just in general? Yeah and no. But those are NPCs, so they don't count. But they kind of do, because there's certain missions where you need to kill them. But I'm not on that mission.
I ain't scared to die. Hey, it's a team close by. Combat's one off.
Selfing.
That's the human. That person right there.
Right there. That's a real person.
She ain't playing. Where'd she go? Sniper. She did. I'm dead. Damn. If it wasn't two of them, I had her. Hey, good shit. Shit. Damn good shit. Good shit, old girl. Or whoever it was. Good shit. Somebody sniping at your ass though. I thought they was on your team, but apparently not. Pick me up. Oh, you do pick me up. We can do this together.
Don't break them. See, they computers, but them niggas like the Matrix, them agent, they start, they pile up on you like them Neo, you niggas right there, boy. amount of ammo. That's really what their job is to do, is to deplete your shit. And make you now gotta go back here where there's even more enemies. To really get you killed. Yep, see? Man, look at my team. They must have died while I was doing things. Losers. See, they should have stayed with Alpha Leader. I gotta be careful. Crossing this fucking bird ass. This large ass Rennie. Geiger counter out. Keep my head on my swivel. Keep my wits about me. Now where the extraction? Damn, I got deep water extraction. I might take that. Oh, damn, both of these joints as far as cow piss. Oh, they dirty for that. They done made the damn extractions damn near. This is the closest one. I'm gonna have to get a vehicle. I'm gonna have to run over through the, run that bitch on foot. Only way. That was a whole fucking team, bro. That just fucking rolled by me, bro. mean, but seriously, this is like DMZ is the craziest game mode ever in any game. Way more crazier than Escape from Tarkov. I mean, like, seriously. Whole squadron rolls by me, no health. I'm still not out the woods. I mean, everything's already ramsacked. I mean, multiple bogeys. Hopefully they cleared my way. I still have my selfie? Yes, I still have selfie. God. I gotta get out of this now. This man, get me out of here. I have no shield, nothing. I can't believe that whole team literally rolled by me like the Ku Klux Klan. But because my character, I got this fucking stealthy character, them niggas drove right by me, nigga. Those are not robots. This Rico's watching the damn X-Fill. Why would they send that junk right there? There they are. When they attacking them niggas. Oh no, multiple strikes. Oh. Lay low. Just lay low. Lay low. Can I put that plate on and let it do something for me? years, boy. The king of this exfil shit. Nigga, I cannot be left behind. I'm not gonna be left in this Afghanistan shit. I gotta get out of here. We got out the ghetto. We got out the ghetto. That was it. I'm giving y'all. What more do y'all want, man? I done had the hottest streams on YouTube. Nigga. The hottest nigga. Enjoy y'all's day.